following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by Ninjatrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Well, good morning and welcome to Ninjatrader Live. I'll be your co-host, Tom Schneider, CMT with Ninjatrader. And as it has been the way for about the last week and a half, my pleasure to bring in Mike Burke, who will be with me today. How you doing, Mike?
Good morning. It's only been a week and a half.
Yeah, I know.
Wow.
We're almost at Christmas, Mike.
I feel like I've gone through a couple of birthdays here this last 9 days. But yes.
Well, you don't look it. You don't.
Oh, thanks. Thanks. That's very nice to say. Things are going good. I mean, the hurricane has gone through. What a devastation! My friends in Tampa are still without power. But yeah, this, I'm safe here in Miami, and lucky for it.
That's great. That's great. Yeah, we have our father-in-law. My father-in-law, he lives in Punta Gorda. He wasn't there for the hurricane, but apparently the house was hit pretty hard. So I imagine there will be some work done there. But hopefully, everybody, this wasn't as devastating as could be. It sounded like people were evacuating and taking this seriously.
Yeah, I always say this every time a hurricane goes through. It could have been worse. If people in Tampa aren't feeling like that, but people around us, here north, my brother-in-law in Orlando, yeah, it could have been worse.
So we have had a little bit of news today. I want to get to that in a moment, but it's Friday. It's the middle of the month. It's not expiration week. It is the beginning of earnings season, so we might see some different behaviors in some of these stock indices, something to look out for when you're wondering, well, why is this moving, or why is this not moving, or why is it moving in the way it's moving? We'll talk about that. Earnings began this morning, and it was kind of an interesting earnings situation. We start with the financials, so we'll talk about that. We have a great show coming up today, Mike. It's a little light on guests, although Ed Jurken will come in and do his tips and tricks at the midday wrap up.
Yes, and I mean, if you consider you and I guests and hosts, it's not that light on guests. But yes, we have a great day today. You have an event, right?
Yeah, well, so technical analysis explained. We'll be talking about RSI. It'll be a little bit of a deeper dive than we've done before. And then you and I have an event.
Yes, this is the fifth segment of our strategy trading and development foundational course. We've gone through, what strategy trading is, how to evaluate a strategy, optimization, and this week we're going to be talking about strategy automation, which is the ultimate expression here of strategy trading, where you let the strategy make the trades for you hands-free. It's like program trading, and that'll be a fun segment. We talk about how that works in Ninjatrader.
It's like the culmination of all the work and how it comes out, where you can just not even touch the keyboard. It's great. Not even touch the mouse. I love it.
Definitely.
So let's talk.
And then Ed Jurken, tips and tricks after strategy trading. He'll be with us. I'm not sure what he's talking about yet, but it'll be interesting. He's always, he's kind of this Ninjatrader guru that or whisperer, or however you want to call it, and he'll be with us talking about the platform.
Yeah, I can't wait. Ed's always great to see what he has to bring. So let's talk about the news. Let's see what's up today and what has happened already today. So Mike, is when we have a CPI event, generally it's followed by a PPI news report. Today is no different. We had CPI yesterday, and the news came out. It was a little bit different, although it was a little bit of a miss in the forecast. But unlike CPI, it was a miss and it was in the wrong direction. So uh, forecast the headline PPI forecast to be 1.6% year over year. It's actually 1.8. Now let's take it with a grain of salt. It's under 2%, so that's a good thing. Previous though was 1.7%. It ticked up rather than down. Okay, again, 0.1%, not a lot to worry about. I think now the month over month was flat, and it was up slightly 0.2%. So this is the case where the month over month number beat the expectations, but core PPI a little bit higher, 2.8%, forecast to be 2.6. Last month or the previous month was 2.4%. So again, some misses on the forecast, and not going in the right direction from the previous month, although under that 3%. I know they're looking at consumer inflation when they talk about 3%. Producers is under 3%.
So the reason we're seeing that uptick on the year over year, but the downtick on the monthly is that it's a rolling 12 months.
Yep.
And we had a really good print 12 months ago that fell off.
Right.
And so the rolling is a little higher, but that's only because we had a really good month fall off.
Exactly. Yeah. You wonder, well, why is the yearly number going up when we didn't change at all on the month over month? And that's exactly it. It's that averaging the difference in the time periods, right? 12 months versus 1 month. Um, I don't know. I don't think this is as, ironically, I don't think it's as impactful as yesterday's, even though the numbers were a little bit off more, not going in the right direction. It's still not that measure that they use to kind of fixate on for inflation.
I think this will get flushed out by the traders today, and it'll end up being a neutral report for how the markets react. I think there's a much bigger fish in the pan to move the market than this.
So here might be that fish, Mike. Earnings season started, and earnings season usually starts with the banks, with the financial companies. Today we had J.P. Morgan, Wells Fargo, Bank of New York, and I think who was it that said, maybe it was Mike Arnold, I forget who it was. Earnings, they seem fourth quarter to be a little, I don't know, under forecast, a little bit muted. Well, all three companies beat their estimates, and they didn't beat them by a penny or two. They beat them, by J.P. Morgan 35 cents, so 437 versus 402 expected. Bank of New York $1.52 versus $1.41. Wells Fargo also $1.52 but versus $1.27. So these aren't insignificant beats when you're talking about those numbers. But I think really what is the impactful thing about those reports, it's not necessarily the earnings, it's the revenue. So JP Morgan expected to get almost 42 billion in revenue. Revenue came in at 70 billion. So think about that. That's a huge miscalculation on the forecast. Bank of New York, 10 billion versus 4.5 billion estimated. And then Wells Fargo, 31 billion versus 20 billion estimated. I don't know what's going on.
Why am I only getting 0.001% interest? That's what I want to know.
Exactly.
That's just absolutely ridiculous.
Yeah.
But yeah, we're in that environment now, right? Where they have loans on the books for whatever interest rate. Interest rates are coming down. That's just pure profit for them.
Yeah. Yeah. So, this will most likely give a little bit of a lift to my guess, the Dow, because you think E-mini, you think NASDAQ, you think more tech-based. Russell,
Yeah.
small caps, not going to feel it. So the Dow, I forget which, I think, is it JP Morgan or Goldman? One of them is in the Dow. So I think the Dow will get a lift more than the other
So
stock.
my bellwether for financials is Bank of America. I'm not sure when they report. I have a trivia question for you, Tom, and the
Yes.
audience. So Bank of America, what was the original name of Bank of America when they first were founded? I'll give you a hint that it is not Bank of America, and
Okay.
it's Bank of this other country. So without Googling it, maybe the audience knows what was the original name of Bank of America.
I'm going to say Bank of Holland.
Bank of what?
Holland.
Holland. That would be incorrect.
Okay. So when are you going to let us know?
I'm going to let you know right now. This is I'm not going to leave you in suspense. It's Bank of Italy.
Oh, wow.
Isn't that interesting?
Whoa.
Yeah. Yeah. Yeah, that is interesting. Bank of Merrill merged with Merrill Lynch,
Yes.
right? So that's how these things change, right? These banks acquire other banks and just morph into these really big banks. Also, what is happening? Goolsby is speaking. Now was he speaking earlier? Let me see. Um, he might have been speaking earlier too, and in Europe possibly. He said that this was around 4 o'clock in the morning. I don't see convincing evidence that the economy is overheating. So he's not really concerned about that CPI print. These are the things they just happen to be speaking when these reports come out and they address the topic at hand. It's just so close to the 20 or the 50 basis point rate cut that of course that rate cut isn't affecting the inflation coming now. So I think that's fair to say. That's what he said. But we also have some other news coming out. We have Michigan sentiment or consumer sentiment, University of Michigan at 10 a.m. That could be a mover as well.
It could be.
Um,
That could be a mover.
there's just not a lot of news today. Lori Logan is speaking at 10:45. She's the Dallas Fed Bank president. The big news, though, I think, is what's known as the WASDE numbers, the World Agricultural Supply Demand report that comes out. Corn, wheat, soybean, cotton, all that good stuff. That's coming out at noon. And then Baker Hughes rig count at 1. Mickey Bowman speaks right after that at 1:10. So maybe a little bit free and clear in the afternoon with not a lot of Fed speakers. And we'll just have regular end of the week trading.
No, I I agree. The only other thing I think it's not really news related, but it's getting there, and that is that 210 is getting closer and closer. I don't know if they crossed yet, but they're getting pretty close.
Yeah, so let me see. I do have a chart up that I can bring up. Maybe we could take a look. This is a pretty plain chart. It's just the twos right here in blue and the 10 right here in gray. And we're back to normal inversion as we see the twos on top above the 10. That means the twos are yielding a higher yield, higher rate, which is not normal. And I have to actually pull in more data to see how far back that goes. It goes back almost 2 years. So we're back to kind of normal inversion. Today, though, Mike, a little bit of discrepancy here. The spread might be widening
It's
just
interesting
today.
because it's interesting because the 10-year bonds are down a little bit, the 2 years are up a little bit. And so, yes, that's exactly what we would see here. I had it reversed in my brain. So
Yes.
yeah, this is actually what's happening in the bonds as well. So yes, you're right. I misread that.
And so, you might hear that they're reinverted. Just realize that they're the news, whoever you hear it from, that's the cash price. That's not the futures price. So the futures price is going to be a little different from the cash price. This may reinvert. This may stay normal. Who knows? But uh, my understanding is about this time earlier in the week, the cash rates reinverted, and it could be brief. We've seen that before, right? We've seen this go back to normal for 2 days and then reinvert, and then now it's back to normal. That happens in the cash as well.
Yep.
While we're here, Mike, let's take a look at the charts. E-mini S&P December contract. And I'm almost thinking, Mike, of moving the hamburger bun up. What do you think?
Well, we haven't broken through yet.
Yeah,
So that hamburger bun, yeah, I mean, we definitely should move it up a little bit here.
something like that.
But this will be, right now, that 5,800 level is such a key level here. And we closed above it on Wednesday. We closed above it yesterday. And even though we're down a little bit today, we're still way above that 58. So I think this is still bullish for this market. We're near all-time highs, near all-time high closes. Just a little bit of, just a little bit of normal market noise here.
Yeah, and I mean, if you had told me this time last week, so figure market looks like this, and you tell me that, okay, we've got two inflation numbers coming out Thursday and Friday, I'd imagine something like this as well. A little bit of a uh, maybe switch these candles, a big move on the CPI and a smaller move on PPI. We got the opposite. We've got big moves, should be anticipatory in my mind. And then we get the inflation numbers. They're little. They're nothing. These are small bars. So just kind of a weird world we're in.
I agree. Let me look real quick here. So, right now, if on my daily chart, the volume for the last three sessions has been below the average.
Hmm.
The average is declining. So we're seeing a little bit lower volatility here. And, so far today, we're well under where the volume is normally at this time. So again, very quiet market. It's again, I think we talked about this before. There's this tension in the Middle East, and everyone is waiting for somebody to release that tension.
Yes. Yeah. I agree. Moving averages trending up. I agree. It's bullish overall, but we'll see what happens. Open-minded today. Let's take a look at the micro Nasdaq. I like that. It has more volume than the Nasdaq, than the big. So um, MNQ December looking very similar. More of a pullback though today compared to this candle. We're trading near the lows. I'm going to move this up though, Mike. There we go. I don't know. I mean, what can you say that's different about the Nasdaq?
Yeah, I mean, I agree. Again, maybe a little bit more noise than the ES over the last couple of weeks, but not a lot here. And again, in this particular market, right, we're above, we're not quite there yet, but 20,500 is that key level for this market. And just waiting for it to breaking above that. And again, just to be clear, all-time highs are back in July. So we've been below all-time highs for a long time, where the ES and the Dow have been making new all-time highs, over in that interim period.
You just, it seems to me, I wonder if it has to be driven by the tech, something in tech, right? We're going into earnings season. Nvidia is late in the earnings season. It doesn't really report when the other tech companies do. It does like 3 weeks later. So you just wonder if it's going to get a boost when we get some more information from either Nvidia, another semi, maybe the FANG stocks, or I forget, I'm dating myself, Magnificent Seven, whatever it is, right? Um, but it just, I don't know what else will propel this.
Yeah, and I think the fact that there may have been some overshooting, some overexuberance in the tech stocks that drove up those highs in July, and and the market's just kind of absorbing that kind of overboughtness, if that's a word, and we're seeing that.
This is the 200 down here, and pretty nicely respected throughout this whole uptrend. Uh, Almost got there back in April. Then it didn't close below here. It looks like when you see a green candle and it gets below something, that's not a close. That's a close above. That's not a close below. And then, of course, recently early September, not a consideration now. So just, the importance of the 200 is really showing through on the NASDAQ.
Agreed. Oh, just real quick while we're on the ES and NASDAQ, VIX is still above 20. It's at 20.83. It closed there yesterday. Kind of a doji, not a lot of guidance for today.
Right.
We're still in very bearish mode on the VIX, but the really tight kind of doji candle we saw yesterday really kind of steers us toward indecision today. So maybe a neutral day today.
Yeah, and you'll see that with small bodies, or like you said, dojis on the VIX. You can see them in the price here. So we'll monitor that. This is looking a little more bearish on the day than the E-mini S&P, but it is volatile, like you said. NASDAQ moves a little more jumpy than the E-mini. So if there is a reason to go bullish, maybe the Michigan sentiment, maybe opening range, I wouldn't count this out as one to overlook.
Yeah, my my counter to that a little bit here is that I don't think anyone really wants to be long over the weekend, so we could see some some closing out of long positions as we get closer to the close today.
Good point. Yeah, the close. E-mini Dow. Could do the same thing here. Move this up a little bit.
So all-time high close on Wednesday. That was a nice move in the Dow. Maybe maybe a little bit of rebalancing, I think, maybe on Wednesday. And then, yeah, yesterday and today look very similar to ES and NASDAQ.
Yeah, this doji, indecision kind of reflects what's happening in the others to a much finer point. Yeah, I'm open-minded but bullish overall. So yeah, can't say much different about the Dow than you could say about the other two, but the Russell, let's take a look at the Russell. This is going to be a different looking chart. I'm going to get rid of the triangle.
Okay.
No surprises there.
Okay.
Still in this downtrend, still in a trend channel. You might adjust the trend channel a little bit, which is fine to reflect the trading, but you do that too much, and then to me, the trend channel really isn't as good, because if you keep moving the boundaries, then what are you using them for? This tested, let's say, when we move the top of the trend channel to the top of here, but we're staying within here. This just looks like consolidation. You've got two moving averages, the faster moving averages going sideways basically, and then the 8 is about to cross the 21. You still have upward trending 250 and 200 moving average and 50 moving average slightly uptrending. This just looks like consolidation.
The interesting thing here is the Russell is in the lower range of yesterday's trading range, whereas the other three are near the upper range. So this could be a little bit more negative today than the other ones. Well, we've seen that a little bit.
Yeah, I mean, looking at this, you have lower highs, lower lows, red candle. It just looks bearish, where the others, I would say, I'm more bullish.
Yeah. You want to do first into the chat?
If you could take that, Mike, I'm unprepared.
So first into the chat, Raleigh is first in the chat. Raleigh had a great session with us this week talking about his trading as part of our Show Us Your Chart setup program. So Raleigh, congratulations for being first in the chat. You get a special shout out, and thanks for doing that session for us. So that was great. And first into the chat is Lobo. So Lobo, thanks for being here. Again, special shout out to you. Want everybody to join the chat. You can go to YouTube and join the chat there, or you can come to ninjatrader.com, join the chat there, watch the event, and join the conversation. You can comment on Tom and my analysis. You can suggest markets to look at. Tell us what you're doing today, what you're trading. So definitely join the chat, join the conversation.
Yeah, thank you for coming in, Raleigh and Lobo. That's great. And yeah, Raleigh, I hope you all got to see that yesterday. I thought he did a great job explaining his charts, explaining himself.
I have we have a question for you, Tom. Is there a reverse Head and Shoulders on the NQ daily?
Let's take a look. It's going to be long term. So a reverse. So a reverse would be bullish, right? Because Head and Shoulders generally is a topping pattern. A reverse would be a bottoming pattern. So the thing is, when I look for reverse, I look for a low, right? So I look here and see, man, that could be the low, the head. I think if you turn your head a little bit sideways, you could say that there is one. Um, something like this, even though that we have a little bit of a push up here, I would argue that there's probably something like a shoulder here, a head here, a delayed shoulder here, and maybe a breakout. Now, if that's the case, the measurement of trying to see where this market may go based on this Head and Shoulders is a little bit of a finessing of data, right? Because depending on where I put my neckline, that's going to determine my target. If I do something straight like this, that's kind of a stretch of the Head and Shoulders, but if we were to do that, my target would be a little bit higher. So if that is the case, we'll just use a flat line. Then I'm measuring from the low, which is the top of the head, right, to the neckline right here. And I'm going to move this over. Oops. I'm going to move it over. And it's real easy on a flat line, basically. You just put it where the line the line is. You put the low end of it. And this implies about 22,550. Now, it doesn't have to get there. If you tilt that, though, you might see that this is a shorter target. So that's why the importance of the neckline matters, because it not only shortens up this target, but it also it lowers your breakout period or breakout target. And that's about 22,000. So 500 points.
Yeah.
All right. Let's take a quick break and we'll be right back. And we are back. Ninjatrader Live. I'm Tom Schneider. I'm with Mike Burke. And Mike, here's a crude chart, daily chart, and a little bit of a pullback today. Crude is down almost 1%, kind of stuck in the mud in my Ichimoku cloud.
So we finished strong, right? Yesterday in crude, we ended up closing above 75. We wicked through 76. So yeah, maybe, maybe Wednesday and Thursday were just a little bit of a pullback, and again, the tensions in the Middle East are driving this higher. You're in the Ichimoku cloud there, so getting out of that cloud could be a little bit tough. The top of that cloud is 66, 60 or so.
Mm-hmm.
So that would be a breakout that I'm looking for. If we can break above that, maybe we can make another run to 78 or 79 like we saw on Tuesday, at the top of Tuesday.
Yeah, I agree. I mean, we've got this 200 moving average. We really respected it back here earlier in the week. This to me, another run up there would be, again, a test, but I feel better about going through there. Doesn't help that, it doesn't hurt that this move right here kind of targets 83 or so. But again, we might not get there, right? Things may calm down, things may resolve itself as much as it can be in the Middle East. But this is one of those markets I wouldn't want to hold over the weekend for sure.
No, 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 no. Well, if I were to hold this over the weekend, it would be long, not short, and I wouldn't do that either way. So.
Yeah, exactly. Let's take a look at gold. I know the regular trading hours have started for stock market.
Gold, please.
Here we go. So gold dipped out a little bit out of our sandwich, but had a nice little turnaround yesterday. And what I mean by that is it's almost like a key reversal and a bullish engulfing. It didn't quite get there, but let's stretch that out so we can see what we're talking about. But it got back up to the bottom of our hamburger bun, which was right about, what was that, Tuesday's close, 2640, that important 40 level. Now we're trading above our 8. We finally got above that. It looks like a gap open, Mike.
Yeah, I mean, and I agree with you. I think yesterday was a key reversal. It wasn't a super strong key reversal because, we weren't really at super low lows, but it's a key reversal in a pullback or a downtrend, and we saw great follow through today. And we right now we're still above that 20 moving average, so this is looking good.
Yeah, I think we're back on for 3,000. It's looking a little bleak there.
We're seeing good volume today so far, so we're getting some volume confirmation on this move, so that we could see this move higher.
Yeah, and where could we get to? My target would be 2,700, right? This high is a nice target. Bottom of this is 2695, somewhere in this area, and then it's kind of sky's the limit. As far as we haven't traded here before. This is an all-time high. So that's the target. Could we get there today? Probably not. But anything can happen, and
that's a
would be
pretty
my
big
target.
move for gold. This market doesn't really move more than a couple of percent at the most. You rarely see days that are more than 2% in gold. So there's been a couple of them. A lot of times they're down. So you see a big move in gold, more than 2% is usually down. But there's a few bars on there that are close to 2%. That's one that's probably very close to 2%.
Right, and though that's probably an event day, right, of some sort, whether it was a news event or options expiration. It could have been Fed meeting. This might have been the Fed meeting. That's a Thursday, so I don't know. But if you were to project this candle, it would take us right up to the sloping, this trend line that was supportive. Now it might be resistant, but that's okay. We could still go up in that resistance area.
I agree. I definitely think we could. I definitely think we can get close to those highs. If not today, maybe next week, early next week. But this is a nice turnaround.
Take a look at Bitcoin. Bitcoin up 3.5%. So Bitcoin not following the path the direct path of those previous moves, but that's
Yes,
okay, right?
that was not the greatest call so far. Anyway, I mean, we still have some time.
Oh yeah, yeah. I agree. I think the 8 and the 21 are getting a little bit tangled up here, which just a matter of math, right? It's just that uh, the way this is traveling, it's kind of consolidating. Looks like a downtrend for sure, but we were as low as this. It looks over time. This area, 60,000 to 62,000, has been traded through multiple times. It was even a gap. So this might be an important level, and you'll see those moving averages start to flatten out. What's interesting is you have this 8 crossing above the 21 while the 50 is crossing below the 200, all on with the same candle,
Yeah,
which, you
what an
know,
amazing, yeah,
you don't see that a lot, right?
quite a confluence of moving averages here.
Right. And, it's just saying, okay, short term, that's a bullish signal. Really long term, we still might be bearish. So I'm open-minded, but today's looking pretty bullish. Quick look at bonds. Bonds are the only treasury future that we have. Twos, tens, fives, 30s that are down. The others are up and being supported by the 200-day moving average, Mike.
Yeah, again, this pretty strong downturn starting in the middle of September. At some point, we need a pullback here. I'm just not sure when that's going to happen. I mean, we're right at that 120 level, right, which is
Yep.
super strong level. We're just slightly below that right now.
I think we need
Well, if we close below that level,
yeah.
I think we could. There's not a lot to the left.
Right. Well, 118, we did see support at the 200-day moving averages. That might be an interesting level. It also was a little bit important in the Ichimoku cloud for a little bit. So that would be my next target below 118. But then you get back to these lower lows in July. That might be a more of a realistic target. Um, yeah, 8 days since a green candle.
Yeah.
Pretty bearish. All right, let's
Um,
take a look at the E-mini on an intraday. So, as Europe seems to do sometimes when they open up, they change the course of the E-mini market. In this case, market started trending downward. Now, you could say it was trending downward before, but it looked like support was happening at yesterday's close. Before that, didn't remain as support after or pre-market European session. Got back down to the pivot and stayed there for a little bit. Europe really knocked it down. UK knocked it down to not quite S1 before it got a bit of a lift. Now, here is the PPI report right here, Mike.
yeah.
Crazy news.
In general, I think the market thought that was a positive report for the
Yeah.
most part, right? And again, just a lot of volatility. That equal and opposite is kind of telling as well.
This one right here
So no, at 8:30.
at 8:30.
Wait a second. Am I on the? We're looking at ES 5 minute, right?
A 10-minute.
That's interesting. Let me refresh my data. My data may be a little bit stale here.
Well, I can switch to 5-minute. This is what you're talking about.
That's what I'm talking about. Yes, that equal and
Right.
opposite right there.
So that 8:30 to 8:40 looks like almost a doji on a 10-minute, but it's an equal and opposite. It just represents that the market went up and then came right back down almost to where it started, a little bit lower. So,
And that's a great example of an
right.
equal and opposite is actually a doji.
Yeah,
If you
exactly.
combine the two bars. So that was really a good example.
Right there. And it's just been sideways almost ever since and anticipatory, waiting to see what the institutions will do. Looks like they're a little bullish. They're unfazed by the PPI report. Earnings might be the driver here. Look, the earnings were big beats, revenues were big beats, and for equities, that could be telling of what's going to happen in other markets. I mean, you want an economy to be strong, you need the financials. They usually lead the way, and this might be that time, right, that they're leading.
Definitely.
Let's see. Well, this wasn't the high of the day, but it was pretty close. I don't think it was the high of the day. It might have gone right there, 37.75, 37.75. So we did get back up to the high of the session, high of the day with this move, and we're trying to get there now. So I think this is a nice start to what could be a bullish day, although I like your idea that if we've been up this week towards the end of the afternoon or towards the middle afternoon, we might see those long positions being closed out.
Yeah, it's interesting. This is kind of at break even. The Nasdaq kind of fell out of bed. Let's take a look at that here on the open.
Oh, wow. I'm going to get rid of this area. I could move it down maybe to reflect that, but I'm just going to get rid of it. This was from yesterday. And
We're right at S1 here.
yeah. And right by yesterday's lows rather. So, that's the question. Will S1 hold? We'll blow this up a little bit. And let's just pull this up. S1 is this green line. It's part of the pivot study. Here is yesterday's low. This is a horizontal line I think I had at 20,300, just as a psychological level. Down day, just like the E-mini, but it isn't getting the boost that the E-mini did. This is a bearish candle. Now we're seeing a little bit of a turnaround. Cumulative delta is super negative at the lows. That to me is worrying.
Yeah, so we'll see if S1 holds here as we expected. There's some buyers there at S1. We got down there. They're kicking in. Let's see if they have enough oomph to move us up a little bit. My guess is that we'll probably test S1 again here, and then we'll test that previous low.
Yeah, I'm going to keep this in mind for the 10 o'clock hour for our trade idea.
Agreed.
Let's take a look at the Dow.
So this loved the U.S. Open. Buyers were there, took it up. We really haven't seen much of a retracement here.
Yeah, I think the bank earnings really really might be reflecting themselves in the Dow more than the other stock index futures. We're at 80 on the RSI intraday. I'm using a regular RSI setting, 14. I could do something a little bit shorter, but we're still negative on the cumulative delta, but we're getting closer to that zero level. So if we turn around to positive cumulative delta, we might get up here.
Yeah, so we're above R1 now. We wicked through it just now, R1 on the previous candle. So we'll see here. I mean, this is making good progress. R2 is at 4,300. So see how anticipatory I am?
Yes.
So, yeah, 43,000 is not that far. We could easily make that's only, it's only 100 Dow points.
What is the all-time high on the Dow?
So if we go back, it was
close.
back in September. They're the 27th.
Yeah.
43,005.
So even, this could be a new all-time high today.
Oh yeah, that all-time high is in danger today based on this opening range action.
Yeah, we'll see what happens there. Let's take a look at the Russell.
This market loved the open as well, and as we've talked about before, for some reason, whatever that reason is, the Dow and the Russell tend to be more correlated than with the Nasdaq and the ES, and we're seeing that here.
Yeah, I mean, it's almost, I wouldn't say cookie cutter because, it is slightly different, right? RSI is at 76, not 79. Oh, well, it's still in elevated territory. We're above yesterday's close. We haven't gotten to R1 yet, right? We're not at yesterday's highs yet. The Dow is a little more advanced than that. However, The Russell is up the most. It's up the most. It's up almost 0.75%. So, you can have these weird things where the levels on the intraday based on pivots, yesterday's prices, opening range, whatever they are, the labels might fit different places. The performance of the stock index future in terms of how much it's increased or decreased, since yesterday, these all can be different, but you could have almost the same exact look on the chart. It's really fascinating sometimes.
I agree. We've got some resistance above us. That's the previous high right there, and we've got R1. So I would also draw a line here at 2020, Tom.
Mm-hmm.
Um, this market was earlier we were just under that 2200 level, had a kind of a double bottom just before the US traders came to work there. But this market wants to stay above 2020. We've seen that over and over again.
Let's just take a look at
2200 rather.
2200. I've got 2220. Yeah, we've traded right around 2020 for the last 2 weeks. So this, you wonder why this looks like this. Moving averages coming together. It's because we've just been sideways for so long.
I want to see us break out of that channel.
To the upside.
Yep.
Yep. Crude not doing much. I mean, this is a case where VWAP really isn't helping. Since about 4 o'clock in the morning, we've been trading around it with some regularity, right?
I know we're trading within a 40-cent range here since 5 a.m.
Yeah. 70, yeah.
That pivot point is right at 75. So yeah, we would expect that to be a strong support level, and it has been all morning. And to the upside, we've got that previous close at 70, 75, 60. So yeah, I mean, we need to break out one way or the other. Talking about a trade setup in the next segment, I'm looking to go long above that previous close or short below 75.
So I like that, because when you see a tight range like that, you just think this can't remain, right? This can't stay. Cumulative delta is positive, so in a flat world, there's accumulation going on. More people are buying than selling, so that to me gives me hope for the bullish side.
Yeah, a lot of times when we put on these kind of breakouts up and down, you have a bias which way you want it to go, right? So you're kind of rooting for it to go break out to the long side, not to the short side, because you've got more of a bias that way. But yeah, I agree with you. I think we're more likely to break out to the upside on a day like this.
Yeah. And it could be, Jim's approach, which is let's wait for a pullback to go long, right? Let's put a limit order in and get a price and be patient. That might work today, right? Because we have a range. We know where its boundaries are. We're hoping it breaks out on one side. So we know we could have a possible entry. We know where we could put our stop. We could keep it kind of tight because it is a range bound day. And we could go the other way, right? So if it breaks down, we could go short. So
that would be a nice aggressive approach, right? Where you put a buy order at the pivot point.
Yeah.
And another buy order at the previous close, and try to get 2 units on, and kind of have a middle of the road average entry price.
Yep. We have a great group, Mike, here with us today.
We always do, Tom. We always do.
I'm gonna. You want me to go ahead? I'll read the YouTube. You read the Vimeo.
Go for it.
So in addition to Lobo, we have Six String Dow. Scott K is back. Woodstock 625. The Lieb, Gordon, H.J. Stevens, Sophia Gross, Jorge Castaneda. Nicholas is back. R. Crawford 1030 is here. Dan Diesel, Daryl Booth, Steve Haggerty, Bo Hunter, Sam Outen. And Sam, I was watching that game with disgust. Hope you're recovered. Kevin Stark is here. COE is back. Mr. Freeman is here. Good morning. Lincoln Omblitz and Aviator. Joseph Silos. Chuck Kespert. That might be a new name. Welcome, Chuck. Thomas Bolatow is not a new name. Good morning. JBurn01 is here. Good morning. And Win James. Win Z, how you doing? Good morning. Quincy Smith, and thanks for the kind words, Win Z.
Yes, that's a great group. Art Crawford got it right, Bank of Italy. So well done as well. You know, on the Vimeo chat, we mentioned Raleigh, Polly H, Nola Boy, Jen P, Mark Mosquedo, Mark R, Foggy Kate. Mark R also got it right. Bank of Italy, LA, Michael Crum, Lewis H. Always good to see you. Simo, Mark R, as I already said. Let's see here. Sorry. We have for money, J-Man 2005, Eknos. We have Ken, Franco Demuccio, Jovan, Carlos, New York Yankees. We have Eagle, and always nice to see you. I think Raleigh got it right too, Bank of America. That's pretty much it. If I missed your name, I apologize. I am clearly dyslexic here. Go ahead.
Lewis H. Did you? I don't think you
I did say Lewis H. Yeah.
Okay, good.
But you know, if we didn't mention your name, we apologize. You've got to chime into the chat for us to see you. We really appreciate you being here. We know you're taking valuable time out of your day and your life to join us, and we couldn't appreciate that more.
Oh, for sure. iCal is here as well. And Carlos, New York Yankees, his team moves on to the next round. Congratulations. Kind of a good played game last night. Fun to watch. I was rooting for the Royals, to be honest, just because I have a little bit of a relationship there, more so than the Yankees, but happy for my daughter. She's like Carlos, a Yankees fan.
So who's going to play them? Is it going to be Cleveland or?
We don't know yet. So I was watching that game as well. Cleveland pulled it out, and so they're going to a game 5 in Cleveland. I'm rooting for the Tigers, but we'll see. I like the Guardians too. To me, that's kind of a, pass the popcorn. It'll be fun, whoever wins.
Yeah, definitely.
You want to root for the teams that haven't won it in a while. And the Guardians, when they were the Indians, they won it, I think, last time in the 40s. Or maybe they didn't win it. Maybe they just appeared in the World Series in the 40s. I forget. It's been a while. So
you were a youngster back then.
I wasn't even a youngster back then. Yeah, and Mark Mosqueda says go Cubs. I agree with that, but we'll have to keep that for next year, as we're used to saying. Crude, we did crude. Let's take a look at gold. Gold is up 1%. So there's that bullish bias coming through. And you could see yesterday's close and yesterday's low, not even really any factors today. So, you want to look at some intraday factors, pivots, VWAP bands could be helpful. You got this nice-ish profile here, and we're above the point of control. If this market doesn't get that bid, you just want to look for this point of control around 2662, right above that 2660 level, as a possible place that this market will return to. It might get a pullback and keep going, but if you start to see some downward action, 2662 is my next level that might show some support.
Yeah, we're seeing good volume today. Where the volume today is higher than it normally is at this point. But the range is a little less than it normally is at this point. So kind of a mixed bag here. But we're testing R2. We've tested it one time. If we can test that level a second time, maybe we do make a leg up. Maybe we try to get to a point where we can take aim at 3,000.
Yeah, you mentioned we're a little bit light on the range. average true range would put us at 2680 if we keep trending up. So I've got that marked on my chart just because we've talked about those 20 point increments or $20 increments of gold. So that's nothing special except I drew that there. But it just so happens off the low where the average true range would be. So something to keep in mind if we do keep going. Average true ranges to me are more targets. They're not necessarily resistance or support so much. So I'm looking at R3, and that would be a big move, another 30 points. I don't know if we can get there, Mike, but
I
still
don't know,
looking.
that would be a 2% move on the day.
Yep.
It's in the realm of possibilities.
Yeah. And that's close to 2,700.
Yep.
Nice. All right. Bitcoin, 3.5%. See, it just keeps going.
It's on the move.
It is.
We wick through 60,000 on the downside. And every time that happens, buyers come in. On my daily chart, that there's a nice red cloud right at 60,000 and below.
Yep.
Yours might be a little bit different. You're above mine, I think. But yeah, if you see that red cloud in the future, that's kind of what my cloud looks like right now at 60,000. So
Okay.
yours is just projected a little bit forward than mine because of our settings. But
Yes.
because this market has been moving sideways so long, like we talked about, we've got all of these confluences of moving averages on this bar.
Right.
And the market is taking that as a bullish move here. We're moving off of 60,000, and we're above 62, so that's a nice move. And
yeah, right.
And I could see this market continuing higher today.
Yeah, now, Mike, I have not looked at on my market analyzer or my charts yet the new Bitcoin Friday futures. Let me see if we can pull those up.
Yeah, Craig and I talked about that on Monday. So if you missed that session, you can go back and watch that.
I don't know if we have the symbol yet. I'll have to take a look.
So that reminds me, I just want to mention this for just a second, is that on YouTube and on the Learn page, we keep the last 3 Ninjatrader Live segments. Sometimes we keep 4, and you can go back and go into that big file, the 3-hour file, and you can jump to whatever segment you want to watch if you missed something. Some of the segments are pulled out. You can see those on YouTube and on the Learn channel as well. But if it's a small segment and there's not a segment for it, you can always go into that big file and jump to whatever segment you missed.
So Joseph Silos is here. Good morning, as is Randy Booth. They made a movie about the Cleveland Indians. Yeah, Major League originally, or an original name, right? Tesla hurting the Nasdaq. Randy, that's a great question. I don't know. Tesla had an event yesterday, Mike. I don't know if you saw it. They rolled out a robo taxi. Are you ever going to get in one of those robo taxis, Mike?
I am dying for robo taxis, Tom. My entire existence today is waiting for a robo taxi to pull up to my house and crash into a wall somewhere with me in it. So yes, I'm definitely looking for that robo taxi. But all kidding aside, I love the concept of self-driving. So that is one of the things that I am looking forward to.
Yeah, I think it's one of those things when they perfect it, right? Or they get as close to perfection as it is. I think we're not there yet, but that's just me.
I love the concept of the technology. If it ever, at some point, I'm sure it will work. When cars are talking to each other, at some point, then it absolutely will work. But in the interim, I still think it's fantastic technology and worth pursuing. I love it.
See, Mike, that goes against why I have a car. I have a car so I don't have to talk to other people. So I don't want my cars talking to other cars. Same kind of, respect the owner. Here we have MES. Sophia had asked about MES. And this is looking like a nice bullish start to the regular trading hour session, we're making new highs on the session. Now the question, Mike, is where are the all-time highs? This is yesterday's high right here, 58.43 and a half. But I think the all-time high was earlier in the week, right?
Yep.
So we have to go back to Wednesday, and we're looking at 46.50. So just something to keep in the back of your mind. We'll mark it on our chart, 46.50, and that's just a tick above R1. So if we get to R1 and go a couple ticks past it, we made an all-time high today. I can't really I could put a horizontal line there. It'll reinforce kind of what's happening at R1. I guess I'll do that. We should make it a very special color, but we'd have like 40 of these in our charts the entire year. I'm going to put a 40.75 because that would be a tick above Wednesday. There we go. So Sophia, there's your MES. We're going to take a quick break, and maybe we'll come back and find a trade idea for the MES. Let's take a look. Welcome back to Ninjatrader Live. I'm Tom. Here's Mike. And somebody mentioned, I think in the chat, that those bank stocks are all part of NASDAQ. They're actually on the NASDAQ. Well, I don't even know if they're on the NASDAQ exchange. NASDAQ 100 does not have any financials in it. It does have a Dollar Tree, though, Dollar Tree and Costco, but it doesn't have any financials in it. So
Yeah,
they
that's
might be.
that's one of the defining features of the NASDAQ 100 is that there are not financials.
There are, entertainment companies like Warner Brothers. There's Take-Two Interactive Software, getting in the software that kind of bridges entertainment and tech. But yeah, I don't think those banks are in there. But Mike, let's take a look at some ideas. What do you think of MES as a long idea? Are we better served somewhere else?
So, I could be convinced to go long everybody but the NASDAQ here.
Okay.
And as you brought up Tesla, it's down 8.5% right now.
Yep.
So that is weighing on the NASDAQ. That was a good observation.
Yep.
By Randy.
Yeah, for sure. I'm putting in a buy order to break out of the opening range high. We've broken out already. We almost got to yesterday's highs, which is close to R1, which is close to all-time high. I'm feeling pretty bullish here. Look at this cumulative delta is just mimicking the price action. Yeah, we're above RSI, the overbought level on the RSI, but that can remain overbought. And that's what we want, really, right? In a trend, we want the momentum to be strong and in our favor. So we'll just see if this is not a blow off top. We'll see if we can resume the party. What worries me a little bit is this lower low, right? But it's right by the point of control. So not surprising. One other thing, these VWAP bands are starting to open up again. So that might be something where it's just reflective of this move up, but hopefully we can keep those opening.
Yeah, definitely. There's a number of good breakout opportunities. So let's look at Bitcoin. That's a small contract. Might be fun to go long here
Oh, yeah.
at let's say 62,100.
So we'll do the same thing. Did you say one or two?
Two contracts.
Two contracts. Okay. So same thing, right above the opening range high. Higher highs, higher lows, green body. What worries me a little bit is this cumulative delta, but it's not, it's trending downward, but that could be profit taking from down here earlier in the morning, right? Earlier in the
Definitely.
morning.
We definitely could be seeing that.
Yeah. So, okay. So if it continues this downward path, we maybe not, we're not in a trade right now, so that's okay. But if it starts turning around, hopefully we'll see it turn around and we'll get our fill. Dynasty 64. Well, that was interesting. Where did that go? Positions. Oh, no. Let me bring my position tab back. So we're long MES, Mike. So let's do some work.
Okay.
Where is our stop? Here's the point of control. Would we do it? Would you want to do a stop below the yesterday's close or a little bit lower?
Yeah, the point of control is right there as well. How about halfway between those two?
Right here.
Order submitted.
So to be clear, that's about 12 points. So I mean, we're thinking about,
Order filled.
we're thinking about a couple of things here. One is we're thinking about, what is the loss that I'm willing to take on this, and how much room do I need to give this trade in order for the best opportunity? So, at that level right there, if the market were to trace back to there, I think that's enough room to give it an opportunity here.
So I'm tempted, Mike, just to put it 58.50 as kind of a psychological number, not at R2 up here. That's 10 handles later, kind of a big target for such a small stop.
Agreed.
So maybe we'll do it at 49.75, just right below that psychological number.
Yeah, that makes sense.
We'll do one
Order
unit.
submitted.
And we'll clean it up if we get filled either way. We are needing to do something in Bitcoin as well. So let's take a look.
Yeah, so that was a super nice move in Bitcoin. I want to take that first one off just below R2 there.
Okay.
ES has hit that first target, by
Yeah.
the way.
Right. Let
Order submitted.
me do this. And I think we do the same thing, kind of opening range low. Yes.
Yeah, right in between there. That looks great.
Yep.
Order submitted.
So let's go back to the MES. Let's tighten up our stop. Let's move it up here. I'm just going to put it right above break even for now. We'll think about trailing it up.
We'll let that run. That looks
we'll let
great.
it run. Yeah. And we can occasionally come back, and if it's really running, we can just trail this stop up, even if it's the same bar. I'm not worried about that.
Yeah, I agree. So how about a Jim Cagnina limit order trade on crude oil?
Okay. So we're still range bound. We had talked about this range bound.
So we missed this trade actually. So I wanted to put a limit order in at 75. We wicked through that already and we're above that. So let's say that we're going to come down and test that again.
Yep.
So let's put a limit order right there, just above 75. We'll put 1 unit on there. And And let's put a unit on at 75, say 65. Well, I mean, stop. I'm sorry, a stop. A buy stop there. So we want to go long here.
Order
And
submitted.
if we get that breakout, you're probably thinking, and I'm thinking it too, as I'm looking at this, is why would we wait for that to get all the way up there, right?
Well, so no. So here's what I see. I see two trades playing out, and we're trying to combine them, and it's not a bad thing, right? So we're confined to a range, and we're trying to get a long trade at the low end of that range. Okay, that makes sense. Um, if we still stay confined to that range, then we have possible upside, right? Because we're buying at the lower of the range. But if there's a breakout opportunity, if crude really takes off, we're saying, okay, well, prove the bullish trade. Prove to me you're bullish. So yeah, you would like to think that if we go long right now at VWAP, that's a much better price than the stop outside this range. But we could get long at VWAP and turn right around.
Agreed.
I think your reasoning, the way you looked at this is through the lens of we want to break out in crude.
Correct.
Yeah. W. Mesticom is here. I don't know if I mentioned your name. Good morning. Elizabeth D is back. Good morning, Elizabeth.
Hey, Elizabeth.
Win Z says, you guys mentioned a beginner's class that recently started. Is it still possible to sign up, or will it be the next time? So we don't really have series that you have to sign up for. You can actually go to our ninjatrader.com website, and once you sign in, all you need is an email to register to be able to use the website. There's a learn section, and in there you'll find several different courses that you can take that are pre-made.
And we have a technical analysis course, and we have a develop the trader in you course. We also have the Anthony Credelli series on Thursdays, where that is a really good session with Anthony Credelli every week. He talks about how to get started trading futures in different markets. So there's a lot of different things. If you have trouble finding anything, you can always send us an email at learn@ninjatrader.com, and we'll be happy to respond and point you in the right direction. Dynasty 64 Thomas is also here. Tom,
Yes,
I'm not sure we said hello.
Yes. So I moved my stop up, Mike, in the MES trade just because this was a big move up, and we had follow through on the next candle. So I just moved it up. Why wait for it to retrace back to break even? I moved it up just above R1.
Makes sense. So we have a couple of crude oil trades working. What else is going on in the world here?
Oh, you know what? I put it on crude, Mike. I'm going to do this.
Oh,
Canceled.
we're not filled yet, so it's no big deal.
No, we're going to move over to micros. Micros are your friends, especially when you're experimenting, right? And Anthony Credelli did a great job of explaining when to use micros, when to use the regulars or minis. But I think when you're experimenting, it's a good time to use it because it's just less risk.
Yeah.
Order submitted.
We'll do this. And we'll do this. And Mark says it's hugging the green cloud on his 15-minute chart. I'm assuming I'm assuming a lot. I don't know if it's a bearish or bullish hugging, right? Is it on top of the cloud or is it below the cloud?
Order submitted.
Let's see. LB Sam, thanks. I'll let Anthony know. It's a good segment with Anthony, he says, and welcome. Thanks for coming back. Um, yeah, Anthony's great. You've known Anthony a long time, right, Mike?
Yeah, 20 plus years. I mean, when
Wow.
he was first getting started, in my other life, we used Anthony a lot. If you ever get a chance to see him in person, just incredibly dynamic, smart, you know, trader, speaker, just a great market guy.
Yeah, I'd love to see him speak at a conference or, some event where it's rather than it's just him and I chatting, it's more of him presenting, right?
Yeah, he's a little spoiled now, to be honest with you. He loves his studio in Naples. You and I visited the studio there. It's really quite a layout.
Yeah.
And yeah, he really does a lot of good work.
Yeah, for sure. For sure. So let's see what's happening. That MES is still moving. The Bitcoin's finally positive. So let's just quickly take a look. And it's okay to take a look at the, oh wow, okay. Feeling pretty good about that, Mike. Look at this cumulative delta though. I mean, it's just still negative, right? Is it just profit taking the whole way up? I don't know. I get a little worried, right? Um,
The thing about this market is that it is very there's a big herd mentality here.
yeah,
When this market starts to move, you can see those green bars get bigger and bigger as it rallies up, and we really haven't had a really big breakout green candle yet. So I'm still optimistic here.
yeah. I agree. I mean, look at this RSI. It's saying we're overbought. We're at 80 almost. Higher highs, higher lows, green bodies. You know, I think this is okay. I think this is okay saying that yeah, people are selling into this, they're taking profits off their position, but it's the fact that it's still going up, eventually that'll dry up. I'm pretty sure it'll turn around unless the price turns around. People start selling again, they might get some pressure. So we'll see, but I like the direction and the first target R2 is good, right?
Yeah, definitely. Well within reach here.
Yeah. Let's take a quick look at gold. I think gold really hasn't, changed too much. It's within the opening range. This is a pattern, Mike. This is a pattern. This is a 5-bar pattern. Have you seen this before? Where you have a big move and then like 3 little moves back and then a kind of a framing move.
Yeah, so if you consider that first green candle kind of as the benchmark candle it's one of the bigger candles that we see on the chart. And then, if the market is going to reverse off of that, which it looks like it's going to in that first bar, right?
Yep.
It looks like it's going to go down. We see a big, but it doesn't get to the bottom of the green candle. And then the next bar doesn't get to the bottom of the green candle. And then the next bar doesn't get to the bottom and close below the green candle. That's a bullish pattern. The buyers keep coming in and sellers really do not have much power behind them. And this is what you've seen. We're going to see a breakout of that opening range high here. And I think that wouldn't be a bad trade.
Let's go to the micro. Normally, like I think yesterday we were talking, I don't normally like to have multiple, so many trades on, but they are in different markets.
And we have a winning trade under our belt as well
Yeah,
here. So
right, exactly. Um, let's look at that winning trade because let's go. Come on. Oh, you know what? That's not the place to switch. It's right here.
that would be a good place to switch though.
It would. So
Still looking strong here.
still looking very strong. And look at that. We got R2.
Yeah.
So I'm going to move my stop up. Now this stop is above our first exit, which I like. If I'm trailing a stop and it outperforms that first target, I feel better.
Yep, I agree.
So we'll just keep that on there. E-mini up 0.5%. Let's take a look at the Russell. That might have been the trade.
Yeah, we missed this one.
Not so bad. I mean, still looks kind of the same, right? Breakout of the opening range, not quite as R2, at R2 yet. Cumulative delta is increasing. RSI off the charts, 81.
Notice how that 2240, that psychological level, stopped the market. And again, that's why I really like looking at these psychological levels. Is that for more than not, they are in play.
Yeah. You can envision it following through, right? I mean, look at this. It really didn't pull back at all in this candle. This 10-minute candle, we basically had a tick down and then it kept going, right? That's very strong. Not a huge wick up here. We're not going to do anything in here because it would be duplicating what we're doing in the micro E-mini, most likely. But that would have been a nice breakout as well in the Russell.
Definitely. Well, and again, you don't want to put all your eggs in the same direction in the same assets.
Right.
So that doesn't make sense. You pick the one you think you have the best chance for.
You know, Mike, that would be an interesting study, is to compare all 4 stock market indices that we have. And let's say we just look at the long side. We just break out above the opening range and see how the market performs after if we get filled, right? So if it's an up day, which one performs better? Now, not all will break out of their opening range. You know, not all 4 will. Some days maybe only 3 will, but it'd be interesting to see after an hour, after 5 minutes, after 30 minutes, how much has that market either advanced or retraced.
It's funny you say that because, you and I, as part of our strategy trading development series, those are the exact kind of questions that we're going to answer in upcoming events. And I'm not sure when we'll kick that off, but definitely that's the kind of deep dive we want to do on some of these ideas to really have some confidence when we're making these trades that in fact it's a good trade to make.
Right. Yeah, I'm looking at my market analyzer. I get a sense of which market is up on the session or up on the day, right? And you'd think that the Russell being up almost 1.5%, it's 1 1/3%. It probably looks amazing after the opening range or during the opening range or whatever it is. But the E-mini might have performed better after the opening range. So that's the kind of, those are the kind of things you want to be able to analyze. And we have the data. It's just how do you pull it out?
Let's look at the 10-year yield. This is a really small contract. This is a great contract for someone who's getting started trading futures. And just to kind of get your feet wet when it comes to, making some trades and just kind of building that muscle memory. This is a good market. And again, it doesn't move as much as some of the other markets, but it's a very small contract.
Look how this candle right here, and it's a little slow because I'm pulling more, I haven't looked at this in a while, so it's pulling new data in. But that candle is the PPI report. And it went from, I was trading, what was it trading at? Like right here, right? 4.089. And it most likely trended down to the pivot, turned right around. Where did it go to? It went to R1. And it kind of was confined between those 2 pivot levels. We hadn't really traded at R1 yet, and we had only traded sparsely, I think. You might have to pull in more data. Let me just try to get down there. There we go. Oops, too much. There we go. So earlier in the session, it had traded down. It was trading down below the pivot, but not a lot of trading overnight in the 10-year yield. Interesting that one news report spanned two pivot levels when it really hadn't before. Stock Strategy Circle asks, does the TED spread still exist? And the question is, are you talking about it as an exchange instrument, or are you just saying in general a constructed spread that people trade? What is that? The 10-year euro dollar spread, right, Mike?
I think it's and again, maybe someone knows this in the thing, but I believe it has something to do with the LIBOR.
It is. Yeah, you're right.
And maybe a 2 or a 3 year bill.
It's a 3 month. 3 month.
3 month. There you go.
3 month. Does LIBOR still exist?
That I don't know. Probably it must still exist.
They had that. Didn't they have a problem with LIBOR being fixed? There was some fixing scandal with LIBOR. Anyway, yeah, that I don't know. Jim would probably know the answer to that.
Jim would know the answer, yeah.
Yeah.
Or Gramsa. Let's see here.
Let's take a look at our micro E-mini trade. It's just kind of treading water right now. Well, actually, I take that back. It just passed through R2. So I'm gonna move my stop up again. I'm not gonna move it up too much though, because just don't want it to retrace back down here to the low. I'm gonna put it a little bit low below the current low, and we make a new candle that keeps advancing. I'm gonna move it up to R2. Carlos says new highs. Yeah, these are new all-time highs. The previous all-time high was right here at 46.50. Now we're at 62.50. That's all-time future highs, and market stays up here. It could be an all-time high close.
The Dow's making an all-time high today.
Let's take a look.
We're above the all-time high right now in the Dow.
Oh yeah, 43,005 was the previous. Now we're at 45 handles past that.
Nasdaq's turned around very nicely here.
Oh yeah, it was red, right? Now it's, yeah, that's the thing. This is where that idea of which would have performed better. It's almost like who cares, right? On a day like today, they all broke out on the upside. They're all seeing a little bit of follow through. If you were long these markets after, sometime in the opening range, you're feeling pretty good, right? But just knowing which one performs over time, what does the data tell us? That would be interesting to know, because you might think, why are you choosing the Dow, or why are you choosing the Russell? Why are you choosing the E-mini? Well, the data tells us that that's the one that performs better. It doesn't mean it will, but that's something we could probably take a look at, Mike.
Yeah, I agree. Our Bitcoin trade is going nowhere.
Yeah, what point do you abandon? I mean, we're still so close. Higher lows.
Yeah, I think, we'll give it another 5 or 6 minutes. So we're not going to keep this going once we finish this segment, but
would you tighten up the stop? We've been in this about 20 minutes now.
So that's a 50-50 bet there. Do I just cancel the trade or bring up the stop? I'm more likely to cancel the trade.
Okay.
Yeah. We had a nice run up. We just didn't see any follow through. And so that trade didn't work. It's just
our crude trade, Mike, coming in late. Look at that breakout.
Excellent.
All right, so I'm going to cancel this order because I don't want to buy it again.
Order canceled.
I'm done. I'm going to put in a stop. It's going to be pretty tight just because we have a couple minutes left in the segment. we only have one unit because remember we split our units between a retracement trade and a breakout trade. And where do you think we should try to get to, Mike? I mean, we could leave it on and we could see if it goes through, but I would probably.
I'd like to see this hit, 75.90.
All right, let's see if we can get it in the next couple minutes.
Order submitted.
And let me just do that. Oh, look at that. You like to see those jumps. Now, the question is, first of all, we blew right through a news event we didn't talk about, Mike. It's my fault. We were looking at trade ideas. And most of you probably know we went right through the consumer sentiment report from University of Michigan. It was a little bit of a miss. It was forecast to be 64, came in at 62.7. The previous month was 63.3. So miss. It was expected to go up a little bit. It actually went down a little bit. I don't know if that mattered much because you saw the reaction to the news, or maybe not. The market's just shot up.
Agreed.
And maybe we're back into good news is bad news. Bad news is good news.
This is just slightly, ever so slightly bad news.
Yeah.
So
Let's go to our micro E-mini because I think it made a little bit of an advance. Well, we're still not at that all-time high yet that we just made, 66.50. I'm going to be happy to close out if I have to based on time because this was a nice trade. Not so much on the Bitcoin. That's okay. A little bit of a pullback there. But we went long on all three of our trades, Mike. Maybe, this market analyzer is telling me, yeah, long might be the way to go. A lot of green on the board.
absolutely. I wonder why the dollar is weak against major market currencies. Interest rates are up. Maybe the dollar's, a little, maybe the dollar's a little weaker than we think here. So if bonds turn around, I might be bullish some of those currencies next week.
Yeah.
So Tom, you've got RSI coming up in the next segment.
Right. We're going to talk about RSI, kind of start with the basics, and then some ways it's been adapted, kind of beyond what J. Wells Wilder wrote about in the book that you have, Mike. But yeah, that'll be the next segment, technical analysis explained.
And then don't miss the segment after that. Tom and I are going to be talking about strategy automation. One of the things that got Ninjatrader to where it is today is the ability to take an idea, put it on a chart, back test it, optimize that strategy, look at the performance, and then automate that strategy for real world program trading hands-free. So we're going to talk about what that process looks like. If that's ever anything you've ever been interested in, don't miss that segment. And then at the end of Midday Wrap Up, we'll bring in Ed Jurken to show us some tips and tricks in the web platform.
Yeah, can't wait to see you and Ed discuss everything. Mike, real quick, we just got filled on gold. We have four trades going on. This is too much.
Definitely.
I'm going to close out. First of all, I'm going to close out my gold trade.
The gold trade just took.
Yeah, but we're running up against time.
Oh, got it.
So
okay, perfect.
We've got about 20 seconds to. I'm not going to. Well, you know what? I'm going to flatten everything. But
okay,
let's just.
That makes sense. This has been a great day.
Yeah.
That E-mini trade, kind of made everything else work as well. So that's great.
Yeah, and kudos to Sophia for pointing that out. Thanks, Sophia. We might have found it on our own, but I would like to give you credit because I saw that. We brought it over. So
Definitely.
good job. Good job.
All right, everybody. We will be right back. Stay tuned for Tom and RSI.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
And welcome back to Ninjatrader Live. I'll be your host, Tom Schneider, CMT with Ninjatrader. And this segment is called Technical Analysis Explained. So in this segment, we generally take a deeper dive into some of the concepts we talk about on our live streams. You might read about in our blogs or on our website. And today we're going to start with, I think, probably the biggest indicator that is used outside of moving averages in terms of technical analysis. So when we think about how we can analyze a chart, I always start with price is king. Price is the biggest thing, but the derivatives that come from price are pretty important. Averages, moving averages being a great indication of trend. But I think what we're trying to anticipate as traders is not just what the trend is, but when it might change. And this is where RSI comes into play. It's a momentum strategy, or a momentum indicator rather. And so it can help us to understand when the market is stretched or when it's not stretched, when there might be change. And that can help us with, okay, we've been in a trend. This trend might be reversing or even consolidating. So let's just get right into the charts. We'll take a look at the E-mini S&P December future. Just a standard bar chart up here, or a candlestick chart right up here. But down here is the RSI. And what we'll do is we'll take a look at what it is, first of all. We won't go too much into the calculation. There is a little bit of manipulation of data, not manipulation in a bad way, but to make it an index. It's an index that's bounded from 0 to 100. So we'll talk about the benefits of that. But then how you can really interpret it in other ways, and other ways that uh, some innovators, I'll call them, have made it their own, or improved upon it in different ways. Um, so J. Wells Wilder, back in the 60s, 70s, was working on technical analysis concepts, published a book, I believe, in 78, New Concepts in Technical Analysis, I believe it's called. Mike Burke has a copy of it. He might have two copies. It's not an easy book to get, but it was really instrumental in a lot of new concepts. Not just this RSI concept was probably his most used concept, but also average true range, also ADX, these different things that are different measures of the market volatility, trend strength, trend momentum, that kind of thing. So RSI, though, is by far his biggest jewel in his crown. So let's take a look at it. As I mentioned, it's a momentum indicator. It should help us understand when the market is trending excessively either way. The nice thing is it is directional. So I can tell whether we're bullish or bearish in the reading of RSI. So that's just one application. What we're measuring is the kind of taking the changes in price in terms of up moves and down moves. So when you have an indicator, you generally have a look back. It looks back over a certain amount of time. In this case, the default, and I think this is J. Wells Wilder's default, is 14 periods. Could be that was the best results that he found at the time when he was developing this indicator. Now, you might find better indications. You might find with different look back periods, but generally, most people look at a 14 period RSI. Now, 14 periods includes the current data. Look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So this is 14 data points. This is a daily chart. Let me do region highlight X. This is exactly, I'll do it right up to the line. These are 14 data points, and they're used to calculate this RSI value. So it's a moving value. As the market moves, so does the RSI value move. Let me get rid of that. Don't tell me it locked up. Come on now. So when I mentioned that we were looking at the average, we look at the average gains and the average losses for a time period. And we'll see if this chart comes back. We might have to close the program. Let's wait for it to respond. So it takes a look at the last 14 days. For the up days, it calculates what those gains are, kind of on a percentage basis. So if 7 of the last days are up, it calculates those average gains. If 7 of the last days are up, then you would assume that the last 7 days, the other 7 days in the last 14 were down. And so you calculate the average gains. The beauty of that is it's not just saying there are 7 days up and 7 days down, so my value is 50, right? Half up, half down. It's halfway point. It actually measures the gains. It measures the losses. So if 7 of those days the market's up twice as much as it was down, then you get a better positive reading. And thankfully that didn't crash. We came back. So what he did is he took those average gains, average losses, made a ratio, and then turned the ratio into a 0 to 100 reading, right? It's kind of like a percentage measurement, but it's a calculation that you can look it up. It's kind of an indexing calculation. So what is the beauty of that? The beauty is I can take any market, doesn't matter if it trades like natural gas in the $2 range, $2 to $3 range, or if it trades in oil, in the $75 to $76 range, or like the E-mini trading at 58 80 to 6,000, right? The RSI reading will be on the same scale. So the brilliance of that is I can look at a market and I could interpret that reading. I don't even have to know what a market trades at. I can just look at an RSI value and I can say, wow, that's bullish, that's bearish, or it's neutral. So where are we bullish? Where are we bearish? Where are we neutral? Well, it's more about overbought, oversold, and neutral. Okay. Wells Wilder said, you know what? In a sideways market or a slight uptrend, slight downtrend, yeah, we're going to be in this area between, let's say, 30 and 70. And the farther you get away from that 50, maybe the stronger trend, that you'll find, right? You'll see a little bit of a trend. If it's above 50 to the upside, you'll see a trend to the downside. We can see that price does affect this RSI. This RSI should reflect what happens in price. When the market starts trending up, so does the RSI, right? The market starts trending down, so does the RSI. So it doesn't always mean that we're sideways for a long time to be at 50. You could be at 50 right here, right? Here's 50 on the RSI. Where are we? We're kind of in a downtrend, right? We're starting a downtrend. We continue through, now we get down to 38. Okay, not a real strong downtrend because we saw it turn up. But if we pull this in over time, we'll see periods where we did get to an extreme value. An extreme value is considered under 30, which is usually marked by a line on the RSI study, or above 70. We consider these overbought on the top and oversold. Now, it's a relative concept. It means overbought doesn't mean we're going to snap back to neutral territory. Sometimes it does. Oversold, same thing. Sometimes we get oversold and come right back into neutral territory. Sometimes we get overbought, we stay there for a while. So it's not necessarily about where we are in terms of the overbought, oversold. As we're above 70, look for a reversal. Like I said, we could stay up there. Really, it's about getting out of overbought or oversold back into neutral territory. That's a signal-based system that people who follow RSI might use. So if I look at areas where we dipped below 30 and then popped back below in an uptrend in a bullish market, you'll often see that behavior where it is just a touch below 30 and then it doesn't stay there long and it turns right around. In a bullish market, you would expect a little bit of a stay above 70. So everything else being equal. But some RSI users are looking for that cross of 70. It's really not cross above so much, but it's cross below. Now, if I'm looking at, let's say, my market analyzer, I don't have RSI here. I can quickly add it. If I right click and go to add, columns, I can see columns that are available to me include what you would expect in terms of data, right? Ask, bid, daily, the high, the low, the volume, all these data values that come from the exchange. But there's one item in here that's very powerful, indicator. And that allows me, when I add it as a column, to pull in the RSI. Now, if I scroll down, I'll find RSI right here. And there's only one value associated with actually, there are two. There's RSI and the average. But generally speaking, Wells Wilder didn't have that concept of the moving average. So RSI is the plot. What we're going to put into our market analyzer. It's the value. It's the RSI value. Now, the question is, what is it being calculated off of? Because this isn't really tied to my chart. This is just a data point floating in the air. I have to tell the system how to calculate it. And so there's some things here, right? The parameters, the period, 14, we'll leave that alone. But really, what is it based on? Well, it's close price, okay, the last one, that's fine. but not from a minute bar. We want days, and we want a daily chart. So now I've got this day here. Okay, that's great. The last thing I want to look at is we don't look at data based on, we don't load the data based on days. We look at bars. And then I just bars to load 50. That should be enough for a 14 period RSI. I want to calculate on each tick. We'll hit apply and OK. And now I've got this column over here in my market analyzer. I'll blow this up a little bit. And you'll see this label that says RSI 14.3 on daily data. I can edit that just by going back to columns, clicking on that configured and going to the label. And I could call this RSI. Or I could be more specific. I could call this RSI daily. So I know that it's from the daily chart. If you're the only one using your NinjaTrader platform and you understand what it is, you can keep it as RSI. I generally look at daily values on my market analyzer, even when I'm trading, because I want to reference that. Kind of that idea of what is our bias on a daily chart. So now I just want to double check and make sure everything's okay. And what are we looking at? We're looking at ES. So now this says 6267. This says 6501. Okay, that's interesting. I'm going to change my column yet again. Think I know what the issue is. The issue is with RSI, we use an exponential calculation. The exponential calculation does depend on a starting point. I'm going to bring in more data and see if that applies. And now we have 6271. So that shows the importance of where your starting point is in data. That's a whole nother topic. But I just want to make sure that my values match my chart. If I'm looking at a chart and I'm making decisions on a chart, I want my market analyzer to match those values. Exponential calculations, because they are using exponential moving averages in this calculation, do make the difference when you pull in 50 days versus 350 days. So just make sure if you see different data, that's why. I'm pulling in 350 days on my chart. So that's why it matches now on my market analyzer. Okay, so why is that important? Because now I can look at my list of indicators and I can look at the RSI column and I can see that, well, RSI for the E-mini is at 62, whereas the NASDAQ's at 59. That tells me ES is a little more bullish, has a little more bullish momentum. I might favor the E-mini if I feel like it's a long day. Look at the Dow, 64. Wait a minute. Scratch that about the E-mini. Let's take a look at the Dow. Dow's at 64. It's a little more bullish momentum. Russell, 55. I'm going to pass. Okay. Or if I'm thinking it's a bearish day, maybe I switch to the Russell because it's a little less bullish. Maybe I don't trade at all. That's a whole nother story. Gold, 59. We know gold is near all-time highs. We would expect the RSI to be bullish or close to being overbought. Silver, 55. We have all these numbers. Look at bonds. Bonds been in a downtrend for 8 days, 8 consecutive down days. RSI is below 30. Let's see what that looks like. So we crossed below this threshold, this 30 threshold, and we're still there. Am I finding support here? I don't know, but this could remain below 30 as the market trends down. So just because we get below 30 doesn't mean we expect a reversal. If we do get a reversal, then I'm thinking, okay, maybe we did find a bottom. So something to think about. Currency, same thing. The euro at 35, the British pound at 42. Lower end of the RSI, maybe a little bit bearish. Let's go back to the E-mini, because that's not the only use for the RSI. It's a great guide to judge other contracts or compare other contracts to say which one is more bullish or bearish than others. You can actually color code this column to, if it's above 70, color it green. If it's below 30, color it red. Or you could flip it, right? If it's overbought, you might want to short that market. So if it's above 70, let's actually make it green because red, because I might want to short it. Whatever your color scheme is, it's up to you. But I think the important thing here is, knowing that you can compare any market. So let's take a look. Actually, let's take a look at the NASDAQ. And I'm trying to find an example where, oh yeah, here we go. Sometimes RSI is used for what we call divergence. Divergence is when the indicator does not indicate the same thing as the price. They diverge. They have different indications. Really, it's about comparisons or trends. Let's take a look at the divergence on the NASDAQ that we saw earlier in the year. So when we talk about divergence, generally speaking, we're talking about peak highs and then what we call them peak lows. They're really trough lows, the lowest points that before they reverse. And so I see right here, we use an ellipse. I see a peak high here, and then we're going to copy that and paste it and just move it over to here, right? So you've got two higher highs, but they're peak highs. So they peak, they come down, we peak again, we come down. This one's higher than that one. Pretty easy to see. But in the RSI study, we don't see that. We have a lower peak high, right? So here we have this peak high. And then over here, move it over. Oops. Here we go. Not easy to do. We have this lower peak high. And you could see it. It's pretty obvious when you draw a trend line, right? If I use an arrow, I'll use an arrow up. And of course, the slope really doesn't matter because I could change the x-axis or the y-axis. I could scrunch this up or stretch this out, and that'll affect the slope of the line. It's really about just the comparison. It's a lower peak. So what does that mean? We made new highs here, but we didn't have higher momentum. That momentum is weaker. Even though we're overbought, we're at 81. That's pretty extreme. We're only at 78 here. So to me, when it doesn't take out this high in RSI, that's a warning sign. It doesn't always follow through, but it is a warning sign. And what happened? That weakness fell through, right? RSI continued to trend down. Price trended down. So think of this as like when you throw a ball up in the air and it continues up, but the momentum is waning. Eventually it comes back down. Now you could have divergence in the opposite direction. Let's take a look at bonds, see if they have some divergence. They might. We'll see if this fulfills, if it fills the chart. Now I wanted to talk about another way that you could look at RSI, and I think it was, and I'm blanking on the name of the technician. I think it was Linda Ratchke, but I could be wrong. It could be Connie Brown. The more I think about it, it's Connie Brown. But she came up with the idea, and this took a little bit longer than I wanted, but sometimes what you'll see is you'll see lower lows, and this is a really extreme example. We'll get back to Connie Brown in a moment. These are kind of smaller peaks right here. We're in a downtrend. We'd expect lower peak lows or lower trough lows. But what do we see on the RSI here? The RSI right here, slightly higher peak. You could see in this downtrend, these lower peaks are getting lower, but eventually they start turning up. So the momentum is turning. And what happens? We get out of that downtrend, and now we're in an uptrend. So that's divergence on the bullish side. It's called bullish divergence. But let's go back to the E-mini. And the question is, can we improve upon the RSI? So one way we can do that is we can look at the boundaries themselves. And we're just going to wait for the chart to respond. I don't know what's happening here, but we talked about the peaks and the troughs getting above and below those levels. 70 is the overbought, 30 is the oversold. And you'll notice in an uptrend, we spent a lot more time above 70 than we did below 30. Okay, we would kind of expect that. But what if we move the goalposts? What if we adapted those thresholds to the type of environment we're in? So if 30 and 70 are kind of our general goalposts that J. Wells Wilder came up with, what if in a bullish trend we move them up? And what if in a bearish trend we move them down? So in a bullish trend, we didn't use 30 and 70 as our thresholds. We used 40 and 80. Let's see what that looks like. So we're going to assume a bullish mode, and I'm going to double click on the study to bring up the parameters. You'll see if I scroll down here, lines, those are the thresholds. We can change the line values. Instead of 30, I'm going to use 40. The upper line, I'm going to change it from 70 to 80. I'm going to hit apply. Now you'll watch and you'll see these lines shift up. That looks a lot different, right? Those peaks that were well above 70 are now touching 80 in an uptrend. And here, let's look at this one right here. We got to 80, we touched it. We had a little bit of extension before turning around. We're kind of range bound with these thresholds, kind of at the top end before we get in there, before we turn around. What happens on the downside? We have a lot more time below here. In an uptrend, this seems like a pretty big pullback, right? Well, it's reflected by being below 40. And if we're in a bullish trend, we should be north of 40, north of 50, north of 60. If we're down in the below 40, that's pretty bearish. Now, that's in an uptrend. If we were in a downtrend, we might see something different. We might move these thresholds down to the lower threshold to 20. And you can experiment with this. It doesn't have to be 20. It could be 25 and 75. I'm sorry, 65. We're going to go to 60 here. Now we're going to see a lot of overbought area in an uptrend with these lowered goalposts. But that's the concept that Connie Brown had. Let's adapt the thresholds, the RSI, to the trend. If I'm in a bullish mode, if we've been in a bullish mode, and we've been in a bullish mode pretty much since the end of 2022, being overbought really doesn't tell me much. But if I move the goalposts up, then they become really important. If I get over 80, wow, that is a real big trend, even for a bullish environment. So Connie Brown, I believe she wrote a book about it. I don't have that handy, unfortunately, but that's the adaptive RSI that she had promotes and developed. So RSI, we've been looking at it on a daily time frame. You could look at this on an intraday. You might have shorter periods, but you could start with 14. I do see 9. I even see something lower, like 5 or 3. But it's up to you. You can change those periods and figure out which works best for you. So great things about RSI. We can compare multiple asset classes, any instrument, and get a comparative sense of which one's overbought, oversold, or which one's trending, which one's not trending. You can put this on a chart. You can put it in a market analyzer. RSI, we look for divergence, and we can make those thresholds adaptable depending on the trend we're in. I hope that helps you understand RSI a little bit. It's really taking a look at the past advances and declines in a market and coming up with a normalized number, a rating, if you will, to say, are we bullish or bearish? Very simple, very powerful, and I want to thank everybody for watching. We're going to take a quick break. We'll be right back. Mike and I will talk about optimization and automation. More importantly, automation of back testing. Stay tuned.
Okay, welcome back, everybody. In this segment, we're going to discuss strategy automation as part of our strategy development and backtesting series. As I've been joined on all of these previous episodes, I'm joined today by Tom Schneider, CMT. Tom, thanks for being here.
Mike, it's my pleasure. How you doing?
Good, I'm doing good. This series has been a lot of fun to do. This will be our 5th episode. We talked about, foundations of strategy trading. We talked about the elements that go into building rules, performance evaluation, optimization, and then the ultimate expression of strategy backtesting and development is automation, and that's what we're going to talk about today.
Right. We've done a lot of work to get to where we are, and hopefully we've found something that we're okay with, that we're happy with in terms of the laboratory. But now we're actually going to put this in the real world, or at least a simulated real world, by applying the strategy to our simulated trading account.
So let's just get a couple of definitions out of the way. So strategy automation is the ability to take a back-tested set of rules and apply them to a market, and the strategy will make the entry and exit trades for you automatically hands-free. It's like program trading. It's like being one of those big guys that just lets the computer run and go. And the reason we do this is that we want to be a little more disciplined. We want to stick to our rules. We want to stick to our plan. And it really adds a new layer of discipline to your trading that can really, help you take your trading to that next level.
Right. It also helps with the emotions, right? It kind of takes the emotions out of the trading. If you don't have an automated trading system and we're trading manually, you run the risk of veering from your plan and participating or not participating based on your emotions. This takes that out of it. So for good or for bad, right, we still have to rely on our strategy as being a good strategy for what we're trying to do. Just remember that no matter how well you test a strategy, you could run into 1, 2, 3 consecutive trades that don't go your way. And that's hopefully, something that doesn't happen, but we just have to, be aware that not all trading strategies are 100%.
So that's an interesting point, because one of the things that you get from strategy backtesting a trading idea or a set of rules is you get an expectation of what the risk of that strategy is, what the performance of that strategy is. So it really kind of gives you, a way of knowing in advance a little bit what to expect in drawdown and profitability. And to your point, that can really help keep emotions in check.
So, Mike, maybe let's take a look at the chart and see what we've done so far. This is the micro NASDAQ December contract in this example. It's a 1-minute chart. I know we decided to test everything on a daily basis and look at daily data, but you can also apply a strategy to an intraday chart. And of course, you would want to test it to that time frame. In this case, for the purposes of education, we're applying our strategy 3-period moving average crossing the 10-period moving average to a 1-minute chart so we can show you what those trades might look like.
I mean, if we were on a daily chart, this session would have to be several weeks long in order to see a couple of trades. So using a 1-minute chart is just for demonstration purposes only here, so we can see those crosses in real time and show you what you can expect from the automation process.
Exactly. So let's take a look. So right now you can see this looks like a strategy that we've seen before, that we've put on our chart, and it has notated where we have taken or would have taken trades as the case may be. Now, this is a mix. What we're seeing now is a mix of history of trades that we would have taken had we had this enabled, but also we've actually taken a trade already today using this automated strategy. So when I say a mix, this is what the strategy would have done. And then once we enable it, it actually is trading. So how do we enable that, Mike?
So let me just back up one step here a little bit. So what we're doing here is we're watching the historical back testing of the strategy now in real time. So there's two environments here that we operate in when we're automating a strategy. One is we're looking at the strategy in the chart, and it's generating orders in real time. But the chart, and this is the key part here, the chart is not generating the orders. The way that strategy automation works at Ninjatrader is that we apply that strategy to the control center, and the control center monitors the rules and places the trade. So Tom, yes, let's do that. We already have the strategy in the control. Oh, do we have it in there? Go ahead, go to strategy. So yes, we already have it in there. Do you want to remove that and add it, or do you just want to talk through this?
Well, let's remove it. We're about to get a nice signal, so or maybe a signal. So the way you would do this when you first open up strategy, you should not have any strategy up there, and you would just go to the first item, new strategy, and then you'll see the strategies that you may have developed, but you also have some sample strategies. I use this sample moving average crossover strategy. And here we would take the instrument that we want to apply it to, choose that instrument here. I chose the micro NASDAQ. This is by the micro E-mini because we already have a strategy on for the micro NASDAQ. And we would make sure that this reflects what chart type we're looking at, a minute chart. It's 1 minute, 1 minute. And pretty much everything else works the way we want it to. Here, we would want to make sure our parameters are set to that automated or that back-tested strategy. But if you've saved that back-tested strategy or that optimized strategy as its own strategy, then those should already be filled out. We hit OK. And now I've got two strategies working. I have one that we see on the chart here, which is the NASDAQ, but I'm also watching it here in the E-mini. Now I have not enabled it. This is the key. You can add a strategy to that strategy panel, but until you enable it, it's just sitting there waiting to work. It isn't active.
Tom, can we go back to that edit dialog?
Sure.
There's a drop down there that I just want to talk about for just a second here. And if you scroll down a little bit, it says calculate. So it shows the account that you're trading in, and then it calculates. So let's click on calculate for just a second there. So the strategy that you have in the chart, it evaluates the rules based on a cadence that you set here. Now, the strategy can either calculate just one time per bar, evaluate the rules, and then generate orders, or it can evaluate the strategy on every tick, in which case, if once the rules are true, it will immediately send the orders intra-bar as they occur, or on a price change, which is very similar to each tick. If the price changes and the rules are true, then the strategy will generate those orders the moment that those rules are true. In this case, we're using on-bar close because we want to make sure that the two moving averages have crossed on the close of the bar, and then we generate orders into the next bar.
Oh, that's a very good point, Mike. If you use each tick or price change, you run the risk of crossing those moving averages during the bar formation, getting long or short, but then by the end of the bar, the pricing might reverse and uncross, and now you're in a position where you didn't want to be according to your strategy. So very key when we're talking about crossing events, we want to make sure that we use bar close. So let me
click cancel there.
Click that out. And now what we're looking at, again, is that mixture of historical data, historical trades. We really didn't trade here. This was applied to the chart, but once we enabled, which was back here, and we'll look at how you can tell, this is now trading according to those rules. And in a moving average crossover, if you don't have any other type of exit, you're always in the market. You're either long or short. So each one of these events creates an exit order that gets executed to close out your previous position. And then it does the same type of order to go the other direction. It's a stop and reverse study. So you'll see two different types of orders. You'll close your position and then you'll either sell short or buy. And that is because you're opening a new position. So it'll show you which on top you'll see the one that closes out the position, and then underneath the next order, which will open that opposite position. And so you can see here, when we see these moving averages cross, this 3-period crosses above the 10, we wait for that close to confirm, and then we go long that next bar, because this bar was closed and it confirmed. We see the moving averages continue to travel up as the market moved up. We have a little bit of consolidation that allows the 10 to catch up to the 3, a small pullback, and we see right here, we saw a cross occur. We waited for the close, and then we went short. And then we also, we closed our long position, we went short, and then a quick reverse. This is a whipsaw. That happens in moving average crossovers. We went the opposite way, and now we're long one. And you can see this reflected in my order where I got in, right? This is a one lot that is green, so it's long, and I'm underwater right now because we're trading right below that price.
So Tom, do you need to have chart trading turned on to see that little indication of long and short?
Exactly. So the way I have my chart trader on, you can go up to the top of your chart. You see this egg beater on the side. You have off, chart trader, and chart trader hidden. I like to have that chart trader hidden just as a rule when I'm manually trading, but it'll also show if you have your chart trader on with the ticket on the window. If you turn this off, that indication that you're in a position on the chart disappears. And I can turn it back on by going back to the egg beater and either choosing chart trader, but I like the hidden. It gives me more room on the chart.
So as I said earlier, there's two things going on here, right? There is the automation that's occurring in the control center, and then there's the monitoring of the strategy in the chart, right? So if we go up to the control center, Tom, we can actually monitor whether or not the position that the strategy in matches the position that we are in the real world. So that's really an important point here, is that for the strategy to close a position or take a new position, they need to be in sync. So the real world position has to be in sync. with the strategy position. And in this case, it's our real world position is a simulated environment, but it's the same concept. So maybe talk a little bit about those columns in the control center there.
Right. So the first 4 columns are informational: what strategy, what instrument, the data series, a 1-minute chart, and the parameters for the studies. That's something that we would change if we edit the strategy. Here, this is where Mike's talking about what position does the strategy say that we're in. We're in a 1 long position for the micro NASDAQ. It's kind of, if it didn't know that we were trading this, if it wasn't automated, it still would show a 1 long position, because that's what the chart says. Now the account position is 1 long as well, right? We took a long position when this trade executed, and so they match, so they're in sync. Now, if you're not in sync, you can right click and you can synchronize the strategies, and that'll kind of correct this. But sometimes you'll say the sync is false. You'll see the sync is false, and that's when you'd invoke that. We just have some other informational columns here. Average price. So average price is if you had multiple units. Some strategies you can enter 1 unit, let's say, 1 contract, and then add to that strategy. It's kind of layering in or pyramiding in a strategy. So the average price would take all the entry prices and average those out. Of course, here's the P&L, so to speak, right? Unrealized. This is the current positions P&L. And then this is the P&L of the positions we've taken and closed up until now. The account that I'm in, and then, of course, my data connection, and is it enabled? So that's basically a summary of those columns. But the key here is we want the position. If you're trading this live, you're trading this automated, you want this position to match the account position. And if they are, they'll be in sync.
Click on the positions tab for me there, Tom. This is where you can get a quick look to see what your actual position is in the simulator, or if you're trading with real dollars in a real account. This is where you can see that position. A couple of best practices here, Tom. One of the things you don't want to do when you're automating a symbol is to trade it in another strategy, or to trade it discretionarily through the chart trader or the Superdome. If you're automating a strategy, in this case we're automating the MNQ, you do not want to be trading that anywhere else. That's a real important best practices, because anything you do in that on this symbol other than the strategy is going to mess with your sync. So you're going to mess up that sync, and the strategy is not going to be able to do what it's supposed to do.
Right.
So Tom, we just had a trade. Notice we went from long to short here.
Exactly. So
let's look at that strategy tab again real quick.
Let's go back to strategies.
And now you can see we're 1 short.
1 short. They're in sync.
1 short in our account, and we're in sync. So that's what a live strategy trading fill looks like.
These lines
completely hands-free.
Right. Yeah, I should keep my hands above here.
Nothing up your sleeve.
Let the trade happen. You know what's really neat about the way this is displayed is there's a connecting line between the trades. So every time we take a trade, there's a dotted line, and sometimes it looks like it's 1 line with 2 different colors, but it's just the different trades. Sometimes they don't go the way you want, and the trend stays the same. But we color those according to if they're profitable or not. So this long trade was a nice profit, but this short trade kept going. So we got stopped out. We didn't get stopped out. We got chopped out. We got chopped out because the moving averages reversed, and we took a losing trade there. And now we're with this what was this? This was a long trade that, again, also got a little bit choppy, and we took another losing trade when we got out. And so now we're short, and we're hoping that current trend that was not good when we were long remains now that we're short. So these connecting lines on the strategy, we really haven't talked about them, but they're a quick way to say, okay, where was I profitable? Where was I not profitable with my trading?
Yeah, that makes perfect sense. Yeah, they basically draw a line from entry to exit, from entry to exit. Yeah. Let's talk about another best practices, Tom, and that is when you're automating a strategy like this, and especially if you've got some experience with it, there could be a tendency to want to just let this run, grab your golf clubs and go play golf while this is running and it's making money for you while you're playing golf. That sounds great, but in practice, Tom, anything can go wrong here. You could lose internet, you could lose power. There could be something, the strategy may have a bug in it that you didn't know about until it manifests itself in the chart. So you really need to be present here. Even though this is going to free up your emotions, it's going to improve your discipline, it's going to give you time to work on other things while you're monitoring your strategy. But this isn't something where you can just set this and forget it.
Oh, completely agree. I mean, you said it the best, as if the internet goes out, which is kind of what everybody relies on when we're talking about trading, that alone should give you pause for thinking about walking away from your screen. But you're right. You want to make sure that where the execution is happening, meaning when it's happening and at what price, and are your trades looking the way you envisioned? You can actually apply the strategy without enabling it, so it's not turned on, and you can look at the history to say, okay, I've back tested this, and I can get a good sense that yes, these executions in the past that would have gone off here look correct. But I would also just, that doesn't give me a reason to walk away. I want to make sure that they're correct as they're being executed, because you don't know. There might be something that is between the data provider and you. There might be something that causes this not to behave the way you want it. Of course, internet outage is the number one thing that would make me concerned, but there might be other things. So you do want to monitor and say, is this automation behaving the way I want to? And it could be a matter of programming too, right? So, there are all sorts of things you want to think about, but ultimately, you want to make sure this is behaving.
So, there's a lot of things going on in a strategy. It could generate market orders or limit orders, and how those orders behave in real time can be a little bit different than how they behave historically. Historically, you don't have the fast market tick by tick behavior. So it's really important to, once you backtest something, as Tom said, to forward test it. You don't have to forward test it with automation. You can forward test it, make sure everything is being generated like you expected. Once you have that confidence, then you can automate it in the simulator. Once you have confidence that that's working, you can automate this with your real dollar account with the smallest possible size to start, and then you build yourself up from there once you build confidence in the strategy.
Completely agree. Mike, now one of the things you can do to check, right? We can visually check what's happening, but there's another tab in the control panel, and it's called executions. So this will show you, if you go to executions, these are the orders that are executed across your account. Now you have these different columns, and you have the actions, buys and sells, you have the quantities, all this information. I've sorted mine on time. Here's the time column, just to show what's the latest execution. Kind of makes sense, right? If we're questioning what's happening on the chart, oh, does that look right, that recent trade? I want to see that at the top. So I've sorted on time. And basically, I can look at my chart and see, does what happened on the chart match what happened in my executions? And so I'm looking and I see, well, the last two executions were sells, right, in the micro NASDAQ. And we would kind of expect two of the same trade when we're doing a stop and reverse. So looking at this, at just a little bit ago, we got two sells, which jibes with what I did here. And I can scroll down there's a scroll bar on the right, and I can just continue to slightly scroll down and make sure that this makes sense. Now, you may run into, if you have an account that you trade other contracts in, you may run into another contract, right? And that's okay. You could sort by instrument as well, but you just have to be aware that this control panel shows all the activity, all the executions you've done in this account, not just what's on the chart. But it's a good way to make sure that, look, I don't know if this went off. Let's make sure it did. Oh, it is in the executions tab.
Yeah, that is a good point. If you look at the name column there for a reversing strategy like this on the executions tab, the name column to the right, there you go. This shows you exactly the order entry behavior that each order generated. So it closed a position, it took a short position, it took a long position. You can see that here. And that is a great column to kind of track what's happened in the account and what's happened in the strategy. So, again, there's lots of different data information here that can really help you.
Mike, I do want to remind everybody that this is for educational purposes only. These factors are not optimized. We don't recommend them for intraday or historical or to automate trades in any way. This is just to show you what you can do. We looked for you to determine what's best for you, but realize this tool is available for you to help you be a more disciplined trader.
I agree. So, Tom, one last thing before we go. Let's go back to the strategies tab. And, let's say I'm done strategy trading this for the day.
Yes.
How do I stop it, and how do I get flat?
So the first thing I would do is uncheck enabled. Notice that I still have my position, but the strategy came off of the chart telling me that it's not active. Really, the key, though, Mike, is it has to be in this panel because this is what drives that automation of routing orders to the exchange. To your point about getting flat, you can come
just
over.
One thing real quick. Notice
Yes.
that the position column does not have a position now. So the strategy does not have a position. That's really important to note here. But the account does have a position, and that's what we've got to get rid of.
So the quickest way I like to do it is go over to positions. And if you only have one position, you can use flatten everything. That'll close everything that you have, every order. If you're walking away from your Ninjatrader and you're done for the day, I highly recommend coming here. And if you have a position, flatten everything. If you want to keep the position overnight, that's a different story. Now, if you have multiple positions and you do want to keep one of them or multiple positions, but you want to close this one, you can just hit close position and it'll take care of just the instrument you have highlighted. And so now it closes that position and I can walk away without worrying about having any orders left in the micro NASDAQ.
Perfect. So, Tom, we are out of time. This concludes our foundational strategy trading and backtesting series. There are 5 videos. You can find those videos on YouTube, and you can find those videos in the your client dashboard on the Learn page. And so this has been a lot of fun. What's coming up next is we're going to start doing some deep dives into particular strategy setups, key reversals, opening range breakouts. There's a lot of different things that we can explore and determine and test whether that is a robust entry strategy for a particular market at a particular interval. That work is what I'm looking forward to. That'll be fun.
Once you get familiar with how backtesting operates within the Ninjatrader system, like you said, it gets to be the fun part of backtesting where you can explore your ideas. And we've got a lot of them.
We certainly do. Thanks, Tom, for joining me today.
Mike, it's always my pleasure. This has been a fun series.
Thanks, everybody, for joining us. Make sure you go back and watch some of the other videos. And we'll be right back with with Midday Wrap Up. Thanks, everybody.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Hey, everybody, we're back for Midday Wrap-Up. I'm Michael Burke with Ninjatrader. And today, on Friday, we always have a special guest. And our special guest today is Ed Jurken. He's the Senior Manager for Revenue and Operations here at Ninja. Ed, thanks for being with us.
Mike, thanks for having me. How are you doing?
Good. You know, as I was saying, you know, as we were going here, Dodgers are playing tonight. You know, that's my team. I grew up in Southern California. So hopefully they can pull it out. The Padres have really, you know, kind of been in control of that series all season.
Yeah, well, except for a couple nights ago when LA seemed to really, it seemed to have their number. So it seems like, both teams have, for each of the 2 wins that both of those teams had, they've been dominant. And so it'll be interesting to see who gets lucky tonight.
I'm not sure why we need starting pitchers anymore. Why don't we just have all relief pitchers? Wouldn't that change the complexity and it would just be a sea change for baseball, right? If we just went to all relief pitchers.
Well, I feel like that's kind of where we're at now. if you see a starting pitcher, go beyond 4 or 5 innings, that's an anomaly. And you'll see games pretty regularly where they'll have like what they call an opener, pitch an inning, and then just go right to the bullpen. And like, I get it, but I also feel like for 100 years, pitchers would throw complete games pretty regularly. Why stop
Well,
now?
they'd get furious if the manager tried to take them off the mound in the 8th or 9th inning. They wanted to complete the game.
Totally. And you even see now if somebody has a no-hitter going, they'll pull them. And like, what planet are we on?
What? Yeah,
Where you can't let a guy finish a game because he's at 94 pitches, and you got to pull him and put in the closer.
Can you imagine trying to take Nolan Ryan off the mound with a no-hitter going? I mean,
yeah, could you imagine? Yeah, right. Or Fernando Valenzuela. He'd probably clock the manager for doing that. So no, I know it's the game's changed so much. Just even since COVID, it's changed dramatically. And like, there's not much guys like you and me can do, just fans. But it's always been changing, and I guess these are the newest changes. And I'm sure maybe in the early mid 20th century, a lot of those changes ruffled some feathers, and this is just the newest incarnation of that.
Yeah, I wanted to bring you on today and talk about the WebTrader platform.
Yeah.
There are a number of cool things that are happening in the WebTrader platform in the next few months. We can't share everything with you, but I thought we would get people more familiar with it so that as these new features come online, they can access the web platform, and they can basically do almost everything you can do in the desktop platform in the web platform. And it's pretty cool technology. So I was wondering if you could just kind of give us a run through.
Yeah, I'd be happy to. And first and foremost, I want to make sure that people know that this exists. This is a tool that's available to you from any web browser. So no matter where you are, or if you're staying somewhere and you don't have your computer that has Ninjatrader desktop on it, you can get in here. You can manage your account. Everything is synced up. All of the trades that you placed on your Ninjatrader desktop will show up on the WebTrader, and vice versa. And it's just an awesome tool that people are starting to become more aware of. But as you know, Mike, when people think Ninjatrader, they think, oh, the platform, Ninjatrader desktop, is kind of where their mind goes. And we've got these awesome tools that can help you manage your account in ways that maybe Ninjatrader desktop can't. So I'm looking at what we call our client dashboard here. This is your hub on our website that you can use to manage your account. And then this is also where I go to launch the web platform. So it's as easy as clicking trade. Oh, and I got here by going to ninjatrader.com, clicking login, logging into the account. So here we can see things here. In fact, Mike, if you don't mind, can I show one or two things real quickly here?
Yeah, absolutely. I mean, the thing is that, you don't have to have a live dollar account to access this, right? And you can experiment with all the tools and work with all the tools, with just a SIM account.
Yeah, exactly. And speaking of SIM account, one of the things you can do with that is you can actually change the balance in the account. So we start you out with 50 grand in the account, but for me, a lot of traders, that's not a realistic SIM account experience. So you can go here, if you click this little guy up in the upper right-hand corner, click here, go settings. It'll take you to your settings page, and the default is accounts. And right here, you can go modify balance. And then here you can adjust this to whatever, I would say it might make sense to put whatever you plan to have in your live account in here. So I've got about $1,300 in my SIM account. That feels about right, but let's maybe make it to close to 1,500. So I'll do 144. Let's make it exact. So now I've got an even 15 in there. So you can play around with that. Again, it makes sense. I found that if I have a SIM account with 50K in it, eventually I'm going to start doing goofy stuff like putting on a 10 lot of the ES. And that's not accurate. So we go trade to launch the web platform here. It's going to ask me what type of trading I want to do. Since I don't have a live account associated with this, this is my real sim account. It only says simulation, but if you do have a live account here, it'll give you the choice. You can go in live mode, simulated mode. One thing to note is that whatever you choose here, you're kind of locked into that until you log out and log back in. So just make sure that you're choosing the right one so that you don't place any live trades accidentally. And then if you want to get back, just close it out, bring it back up, and choose live or, whichever other one you want to do. So I'm going to launch the trading platform here. And so you can see it's laid out kind of similar to how I'm sure a lot of our customers have their desktop platform filled out, except it's all in one box. So we don't have the floating windows like you would have on the desktop platform. It's all self-contained. And what you can do to customize it and start adding things to it all starts up here in this plus sign. So this is going to allow you to take a new module, bring it into your platform. So I've got a lot of things that I need here, but you can still put in, you can do duplicates if you want. So I'm going to just grab positions here, take it, and then I can put it anywhere. One pro tip here is if you're using this web platform and really want to maximize your screen real estate, you can put things as a tab. Do you see here how it's kind of floating and I'm pointing to something that nobody can see me point to, but I'm sure you can see that these tabs will allow me to place it here. And this allows me to keep it hidden unless I want to bring it up. So normally I would have and I've got this zoom thing here in the way. So I'm going to grab this and move it down here to illustrate this. So normally I'll have my market analyzer down here, but if I ever want to take a peek at my positions, I can open it up. I can see that I'm completely flat right now and go back to that market analyzer. So this is a way for you to have, triple, quadruple the space of the trading platform, but keep the things that are most important to you front and center most of the time. So speaking of the market analyzer, Mike, this one of the things that a lot of people love about Ninjatrader Desktop is the ability to sync up windows. So for example, if they maybe change the instrument on a chart, it would get changed to any charts or domes that are linked by color to that window. We have something similar here on the web platform, but it does work a little differently. And I would bet dollars to donuts that, it might have confused a handful of folks out there because it does work a little differently. So I'm going to go through that now. So we can see here, let me, there we go, got my chart up. Got a green dot there, green dot here, and my market analyzer has a green dot. So you can set those up by clicking on the dot, picking a color, and then anything that has that same color will be linked. Now, on Ninjatrader Desktop, when you go in here, and let's say I change this to the NASDAQ, the micro NASDAQ. So I click here, and my dome changes, but my chart doesn't change. And one might think like that it's not working properly, or maybe something got set up incorrectly. How it works is that this market analyzer, think of it like a remote control. So you can populate this with all of the contracts that you're interested in. And then when you click on one, so I'm going to click the Russell now. When you click on one, anything that's linked to that market analyzer will reflect that instrument. So it's not so much like if you change the dome, the chart changes. It works like you click on the instrument in the market analyzer, and that changes things. And now I have this set up very bare bones, but I hope you can start to imagine some of the possibilities here, maybe having 3 or 4 different market analyzers, depending on your needs, and having them synced up in different ways. So, you might have multiple charts for the ES. So you could have maybe 3 market analyzers where clicking on one in one linked module will bring up one type of chart. clicking it on another might bring up 2 charts for the MES. So there's a lot that you can do with this. And the best way to think of it is that this market analyzer window is a remote control that you can click on and then change every window that's linked to it.
Yeah, I find the linking feature very useful, Ed. You know, and the ability to link the market analyzer with the chart is the same thing we do in the desktop application. It just allows you to, you know, more you know, you're just more efficient here with space by being able to to link.
No, that's exactly right. So I'm going to walk everyone. I'm going to go back to the MES here. Oh, I can do that from my market analyzer. I'm going to go back to the MES. Placing orders here. Right now I have what's known as an ATM or automated trade management strategy going, and this is a bracket order that will allow you to have a profit target and a stop loss order attached to your entry order. Those 2 bracket orders get activated once your entry order is filled. I can set that up by going down here, clicking this gear, and setting it to my liking. I have it set to dollar value right now, so I have this as $125, which would be 10 ticks. I'm not a big dollar value guy. I don't know how that got in there. I must have been getting a screenshot for someone. But let's go ticks. So right now I have this set up so that I take a profit, or I have a limit order once I get 10 ticks in profit, and then I have a stop loss order that gets activated when I have 10 ticks against my position. And down here, this stop loss type, this will allow you to choose what kind of stop order you want to have. And the big thing I want to point out right now is the difference between stop and stop limit. A stop order, just like a plain old stop, becomes a market order once that price is reached. And so what can happen is if, let's say, the market's moving against you pretty quickly, there might be a couple milliseconds between the time that that price is hit and your order gets filled, and the market might move against you further. And you know, you might see a fill that's 2 or 3 ticks away from your stop price. That's just how exchanges work. And that's just the nature of the stop order. But you are filled and you're out of that position. If you want to prevent against that kind of slippage on your order, there is the option of the stop limit order type, and that does allow you to set a price or attach a limit price to that order, so that once that stop price is reached, it then converts into a limit order. But the thing with that is that your order has to be filled at that price or better. And so if you're in a long position and the market's moving down and not coming back up, there's a decent chance that that order doesn't get filled, because again, it has to get to your price and fill at that price or better. So it's really a matter of deciding what's more important to you in your stop loss orders. Do you want to get filled and get out of that position, and a slippage of a couple of ticks isn't that problematic? Or do you need to get out at a certain price? That's up to you to decide, but that's super important to keep in mind. You know, we do see customers reach out and, you know, during volatile market conditions and say, I had a stop price of 100. Why did I get filled at 95? Well, that was where the market was at when that price got hit. We've also had people say, well, my stop didn't get filled, like it touched my price. And that's because they had it as a stop limit order. It didn't trade through their price or better.
Yeah, that's a great point. You know, especially, you know, if you're swing trading, you're taking positions over the weekend, that stop really is not a stop because it's a stop market order. Once the market starts trading again, that the market could be way below where your stop is, and you can take a very significant hit on that trade. So it's a good point. And again, if you're trying to exit a position on a stop limit really isn't for you, right? I mean, you don't want to try to micromanage your exit when it's going against you. So, you know, I agree with you. I think if you want to get out, that's a stop order.
I completely agree. And yeah, the whole idea is that you're getting out of the position. If, a couple of ticks further against your position is a problem, then just set your stop market order a little bit more conservatively, so that you can get out and, yeah, the last thing I want to see anybody do is have a stop limit order that doesn't get filled. Like, that's just nightmarish. So bear that in mind. So I'm going to set it as a stop. So again, 10 ticks up, 10 ticks down. I'm going to save that. And as you can see in my dome, I'm here on the buy side. So on the left-hand side, at 58 3/4, that's where I would enter the market. And then I have, you can see I have to move my mouse, or you can see on the sell side, it has a stop order 10 ticks below and a take profit limit order 10 ticks above. So let's just do that. Let's get in at the market. You can see I got in at 59 3/4, and then I've got a buy limit order to take profit, a stop order to prevent against additional losses. Now, what we'll see, we can move these. So let's say I want to make this a little tighter here. Oh, there we go. Put that there. Oh dear. And I got stopped out before I could do it. So let's buy again. You can click on and drag these orders and make this bracket tighter. And what I'm hoping to show is that once one gets filled, the other order gets canceled. And that's only a possibility if you use either these ATM orders or you use an OCO order type. It is not, that feature doesn't happen if you just get in here and place orders yourself that are not linked up. So this is a feature that's part of what's again known as OCO, or one cancels other. If I were to just place a limit and a stop order here, let's see here. I got to turn this off. Well, you know what I mean. So again, that feature is only when you have those orders linked. I'm going to show you how to do a one-time OCO order though. So this can happen to traders. You can see my ATM is off. And so if I were to just buy at the market right now, I'd be long, at 60.75, but I don't have those orders in anymore. What I could do is I could go in here and I could place a limit order to sell, place a stop order to sell individually. But again, you lose that protection of the OCO or OCO order, which would mean that once one gets filled, the other gets canceled, and you have less of a potential for an order to get filled without your knowledge and cause some financial harm. So what I see a lot of traders do is they say, shoot, I didn't have my ATM on. I'm going to turn it on. What they'll do, and we'll do it now, they'll buy again. So now they're long two, but they only have that OCO on one of those positions. And so now they're even more confused and concerned, and this can lead to a lot of problems. So I'm going to click this button here that says close to exit these positions and cancel all of my orders and show what I think is a little more effective way to manage this situation. So again, I've got my OCO off. I forgot that it was off, or I didn't notice. Place an order to buy. I'm long right now, and I want to attach an OCO order to this position. You go down here and you click OCO one time. And now this is a little tricky, and you might want to use your sim account to practice this, because again, it's tricky, as you'll see. We're turning this on right now. And what you need to do and be mindful of is to not click anywhere except for where you want to place your orders until that's set. So I'm going to place my limit order here, and I'm going to place my stop order here, and now we're good. What can happen is, people might click that first order to place the limit order, and it doesn't pop up on the screen until the second one is placed, and they might start clicking around, and then that kind of negates the process until they start it again. So you turn it on, you place one of your orders, you place the other, being sure not to click anywhere else, and then that order is set up. And now we have an OCO working. These two orders are linked. Once one of them gets filled, the other gets canceled, and we can show that here. So I moved them in real tight in the hopes that one of them will get filled, and we'll see them both cancel.
So noticed in your drop down there, your ATM, there was an OSO order.
Yeah,
So that's one sends
one sends.
the other, right?
Yeah.
And that could be. So maybe you can explain that a little bit. And my question for you is, can an OSO send a bracket?
I don't think it can send the bracket. So I think it's just an individual leg that it can send. But yeah, the way that would work is instead of one cancels other, it would be when one order got filled, then it would submit the next order to the exchange. So you'd have two orders. The first one would be working. The second one would only be working until that first one got filled. So that's something too that you want to really be mindful of what you're doing when you do it. Because if you think that that second order is, due a fill when it's really hasn't even been sent to the exchange yet, like that can again lead to some problems. So again, the OSO, you have two orders contingent on the first one being filled, then that second one gets submitted and is working. We could try to do one and see if that second order is so having a bracket attached to that second order would be something that might make sense. Like if you're having the OSO so that the first order creates a position, but you only want to have a bracket order working if that order gets filled, or you might want to have it like where the first order exits you from a position, but then that second order is a bracket so that you can, have it on opposite sides of the market possibly, so that you can establish a new position if, the market goes up or down in the direction that you think is most favorable.
Yeah, that makes sense.
Yeah, I would bet that there's no way to do a bracket here. And now I clicked at the wrong spot. So let's turn it off and back on.
So
Still
I would
clicking the wrong
guess,
spot.
I would guess here, Ed, that you would have to have a limit order or a stop order to enter.
Okay.
And then the OSO, you would click where you want that order to be active. I'm guessing here because I have not done that.
It's not a feature that is commonly used. In fact, this would be the first or second time that I set it up. I know I wrote an article about it a couple years ago and then forgot about it. But yeah, the OCO is much more commonly used. I definitely encourage you to familiarize yourself with that process, just in case you're ever in a position. Because like we illustrated, if you start placing orders in manually, those are not going to cancel when the other gets filled. One last thing on this subject with OCOs and just kind of order management here. I'll see this happen a lot. So I'm going to turn OCO on again. We're going to go long. And let's say somebody says, well, I want to get out of this position. And let's say they then turn OCO off. So they say, I want to get out of this position. They click sell market to get out, and then they walk away. We still have two orders working from that first OCO that didn't get canceled because, again, one is only going to be canceled when the other gets filled. They're not necessarily tied to that entry order. If you were to close out that position, those two orders aren't going to close out. So you really want to be mindful that when you walk away from your machine, you're either clicking this close button to get rid of any working orders, checking in your orders module here to make sure if you scroll over to the right, you can see the status, make sure that you don't have anything working. And then last thing is kind of the nuclear option, going up here, flatten everything. So this is a way for you to just close all, and it said I have no orders or positions, but that's fine. But again, that's up here under your cash balance, flatten everything, no working orders, no positions, really get in that habit, because this dome, you can have orders working like, the S&P might have a range of, 150 points some days. So you could have orders working down here that you're not aware of that could get filled. And there's really no recourse if it does. So flatten everything is a huge tool for you.
I agree. Ed, this went by so fast.
It's too fast. I know. Crazy.
There's another there's several more 30-minute segments here that we could talk about here just in the web platform. So thanks so much for being with us.
Yeah, thanks for having me.
We'll do this again.
I will look forward to it. Until then, I would say go Brewers, but not anymore. So
have a great weekend. Thanks everybody for joining us on Ninjatrader Live today. We really appreciate it. Want to invite everyone, to join us again on Monday. There's no bars closing today. It's Friday. Monday is Columbus Day, but we are here. So we'll see you then. Have a great weekend. Good luck in your trading. And again, have a great weekend. Bye, everybody.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by Ninjatrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.